Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, everybody. Welcome back to another live stream. Hope you're doing well. Just a quick update, just a quick reminder, if you are interested in exploring DNA Funded and the different challenge offers that they have available to traders looking to get funded this year, check them out. I just dropped a link in the chat as we speak. Click that link and the promo code, as you just saw, A1T20. There is your super discounted rate off of any of their challenges, if that is something that you're interested in exploring this year. Real quick, as we get started, happy Monday to you. Let me know where you're watching from. We got Lakeland, Florida in the house. Good to see you, Kevin. Thank you for being here. In my country, it's afternoon. Good afternoon. Good morning, wherever you are in the world. Good evening, wherever you are. This weekend, you guys might not have, if for the regular stream viewers, may have noticed that I was out of office on Friday. Missed the stream. I headed up to North Carolina, Wilmington, North Carolina, for a wedding. It was beautiful. Went and actually spent Saturday on the beach. And you know what I did is I left my part of my shirt on while I unbuttoned my shirt. I had a buttoned on shirt. I was at the beach, and it was like one of those kind of like flowery shirts. And I had it on, but I left part of it on my shoulder. So I have this weird, like, pale streak and then a red streak because I didn't put enough sunscreen on. But it was nice. And it was a really, really beautiful wedding. So good to be back, though. Spent the weekend hanging out with friends and my wife and my family. So it was great. And feeling, I wouldn't say refreshed. We had a lot of driving this weekend, but feeling like we had a lot of fun and good to have this experience back in the office. So quick little note, I've been starting my streams a little bit earlier here, and this is the reason why. I want to give people a chance to ask more questions within the live stream. It's a great way, in my view, to connect with the audience, to answer your questions. So I just want to invite you. I dropped a link just now in the chat to anybody who would like to ask a question for the stream. If you have a trading question, maybe it's risk management related, psychology related, maybe it's fundamentals related. If you have something that you're thinking about in your trading and you're like, dang, Nick, can you help me out on this? Click that link and I will do my best at the end of this stream to answer as many questions as I possibly can. So take a second. It's first come, first serve. The bin is empty right now. So if you throw your question in the hat and stick around, have a coffee with me, and I'll get to your questions as soon as I can. So I'm in a gold trade. It is back in the red. Ended up Friday doing some craziness. So let's just take a look at the 4-hour chart. So gold came back to an entry point here for me that I've been watching on this level here of support. So if I just tighten up my zone here, what you can see is price came down, tagged this area, right? And then kept going and has since retraced into this zone, bounced a little bit and came down. Now, I know what some people are going to say right there. They're going to say, Nick, isn't that a lower high? Why would you buy after a lower high? And what I really want to drill in with this topic of lower highs, lower lows, all that stuff, for me and for many technical, traders, a lower high, you have to be careful saying something is a lower high before it's truly a lower high. How do we know it's a lower high? Well, when we get a lower low. Keep it really simple, right? If we actually were to have closed down here, then that's a lower high. But if that doesn't happen yet, right, is that a lower high? In my view, no, that's not a lower high. A lower high is when you have had a lower low to solidly say so, right? So if we break out through these lows, then this will have officially been a lower high, because what is it right now? It's just consolidation. Gold is in consolidation here at a key level of support. So if we take a look at the daily chart here, what you can see is that we have 3,300 being tested, right? We've been in this big up move. We had a retracement to this 38.2% retracement, right? You can see there's that level, came right into that area, and we are now testing this zone of support. And as we pull back into this area, right, the question will become, can we hold that and go higher, or is gold still in the means of correcting? Now, if you're watching this show and you're like, well, Nick, weren't you in gold before? Yes, I was. I took this gold trade from here, and I ultimately got stopped out, trailed out for a profit here. And then you might be confused because you're like, well, Nick, then you just re-entered right after? And the answer is yes. I really liked the way we rejected off this area, and I think it's worth giving a try according to my trading rules. But I took 1/2 of the position size that I previously had. This trade closed out here. My entry here is about 1/2 the size of my first trade. So I took a smaller attempt to go long on gold. And since then, what's been a little bit troubling is that gold has dropped down to a neutral rating. Trend is still in favor of the bulls, but we're teetering, right? We're really close to getting a downtrend or flip to the negative. So I'm just going to, I've took the trade. I'm just going to keep my stop loss on. And if we take out these lows, right, that's my signal for gold to just take a loss, right? And again, this is a smaller size, about half a size of the previous attempt or the previous trade. So I'm just going to look for this one to either continue in the direction that we've been going, or if we fail out here at support, just take a loss and move on. So that's how I'm approaching gold here this morning. The momentum here on this one has been very, very strong. I'm looking for a momentum kind of thrust to continue. And if we don't get that, I stop out. Simple as that. One of the big things that I always talk about on my channel is just how important it is not to fear a stop loss. If you fear a stop loss, your position size is too big. That's the short end of the story, right? If you fear a stop loss getting hit, your size is too big. If you are not too worried about a stop loss getting hit, if you're like, whatever, that was just an attempt that didn't work out, then you're operating within good risk management. It's amazing. Our minds will almost tell us the correct answer. Like if you really want to learn how to trade, you can watch a ton of YouTube videos, and there's certainly value that you can do on that by learning from others. But you can also learn from yourself. Learn from what your brain is telling you about your trade. If your brain is saying, this is freaking me out, it's if that stop loss gets hit, it's going to really hurt me, your size is too big. Simply put. But you might say, well, I have a $100 account and all sizes are too big. Well, that's why you probably shouldn't be trading with a $100 account. I'm not trying to be a hater or a naysayer. It's just the truth. If your account is $100 and you're trying to risk 20 of that of 100, right? That's not sustainable. That's going to blow up to zero pretty soon. It almost always does. In fact, I've never not seen that take place, except for, the occasional news headline. There's amazing. 1 out of, 1 million people who do that will turn $1 into $1 million. And that one person will have a story told about them in the news, and everybody will be like, oh yeah, no, I can do that too. Right? That's the survivorship bias is what they call that. Anyways, that's the update on the gold market here. Somebody's asking me about the euro. So we'll take a look at that. So euro, I still am bullish on this one. I would love to see this thing come down just a little bit more, come down into this area. And then I may be looking for some long setups. We do have on the EdgeFinder, euro dollar getting a bullish rating. We also have pound US dollar getting a bullish rating. And we have the Australian dollar also and the Kiwi dollar. So we got a good bit of US dollar crosses. I'm looking to join that move. Euro dollar, if we get down to like 1.1260, let's call it, pound US dollar, advancing higher here this morning. But if we were to get a pullback here this week, 1.31 looks interesting to me. So I'll keep watching 131. If you take a look at the Australian dollar, we're sitting at resistance. So nothing really big here for me, but really interested in currencies right now. If we can get some pullbacks on some of these dollar crosses, I'm very interested. Just a quick reminder, guys, as I just said a moment ago, if you would like to ask a question on the stream, I just dropped the link again in the chat. Drop your questions there. I will be answering those towards the end of the stream and would love to see if I can help you out in something that you're looking to learn more about within your trading journey. Indices, S&P 500, trying to break away here, guys. We are sitting at resistance on the S&P, and with Nasdaq, I would argue that we are breaking through resistance as we speak. We've got the area here. I'd be very curious to see if we can get some sort of push, retest, right? And then I'm probably a buyer there. So I really like the indices. I don't want to chase them, so I'm not going to do that, but I am very, very curious to see how we go from here, because take a look at what we're seeing in front of us, right? Price action is telling you something. Price action is telling you that you had a downtrend and buyers are threatening an uptrend. Would I say we're in a confident uptrend? No, not yet, right? Because you've had this low, you've had this higher low, but can we get something like this? This right here, if that were to explode higher, I'd say you're confidently back in a bull trend. We're close. It's setting up. And I like the trade quite a bit. We also have EdgeFinder confirmation. Nasdaq getting a plus 11 score on the EdgeFinder. The commitment of traders data showed us institutional money very interested on the long side, right? Let's look at that. I just said a bunch of words, but what am I talking about? You can see it right here. So when we pull up the EdgeFinder's COT positioning, we can take a look at net positioning, which is a bit more of a long-term indicator. And we can take a look at the latest week's buys and sells. And when we look at the latest week's buys and sells, which I think is a better indicator for traders, day traders and swing traders, here's the thing. Take a look at the Nasdaq. It's a clear buy in terms of institutional positioning. This is not speculating from my part. This is not me guessing what institutions are doing. This is not me trying to read into a candlestick pattern to tell you what institutional money is doing. None of that, right? This is straight up what institutional money is doing. It's not, again, it's not speculation. This is from CFTC. A lot of people love to try and interpret what the banks are doing or what the candlesticks are telling you about what institutional money is doing. I think that's a lot of hocus pocus. I think it's a really not a great idea to try and interpret yourself what institutional money is doing. I don't think that that's a smart move because it can be very deceiving. So instead, what I look at is just what institutional money is doing. Now, critics of the COT data will say, well, that's lagging. And yes, that is true, but institutional money operates on longer term trends anyways, right? Most of the big money that's flowing in and out of the markets, they're not day trading that. They simply cannot turn that kind of capital through the markets day in, day out, right? So they are doing mostly long-term stuff. So we can look at, for example, COT data history, and we can look at, if we want to look at like an easy example recently has been gold. Institutional money, this yellow line shows accumulation took place in gold for months on end into this big rally that we've had in the last 2 years. Incredible, right? So we can see institutional money flow. They're not operating off this week and next week. They're operating off the next several months. So just because the COT data comes out a couple days delayed does not mean that the bigger trends are not something we can observe and take part in simply by watching institutional money flows. That's something that we're real big on the channel. Again, people love to say, "Oh, COT data is useless or it's out of date." And well, maybe if you're scalping the 1 minute chart, but if you're watching the 4 hour, the daily, the 1 hour chart, or even the 30-minute chart, this is still relevant information to track what institutional trends, what direction are they trading in. We can see that in the commitment of traders data. And our team has done a wonderful job putting together some of the easiest to read tools. Like, let's just look at the Nasdaq, right? So we look at the Nasdaq, we say, look, in the latest filing, they increased their long contracts aggressively and they decreased their short contracts. That's bullish. Think about what that means. If you were long the Nasdaq and short the Nasdaq, let's say you had a hedged position and you increased on the long side and you decreased your short positioning, that's super bullish, right? So institutional money, they went out and shopped. Meanwhile, look at the chart. The chart looks good. The chart looks really good in my view, especially if you get this move, right? Boom, bam. That is a trade setup 101 that I love. We're not too late in the trend. I mean, maybe if you argue on the monthly chart, but again, the indices can rip higher for a very long time. Clearly, if you've been watching indices for any amount of time, you know that when they're in uptrends, they are monsters. When they're in downtrends, they are really fast downtrends, right? They liquidate. You guys have to understand this move liquidated all of 2024's gains at one point, right? Going up back all the way to December of 2023. We liquidated all those gains in that short time. So just understand, indices move up slowly and they move down quickly. But over the long term, they do this. Well, ignore that jump, right? For the most part, they move slowly up, quickly down, but overall they move up. That's the overall pattern with indices. So if you have a very good reason to short and you do capture the short side, you can make a tremendous amount of money quicker than you ever imagined. If you were long puts in this move, oh my goodness, the amount of money you made in such a short period of time. But there's the trap. There's the trap right there. People obsess on the short side because of how quickly. Here's the thing. If you've ever shorted the indices, you know exactly what I'm talking about. If you've ever shorted the indices and caught a winning trade, like you caught this move, for example, the problem is people catch the bug when they do that, right? If you were long puts or you were short the market in this time, you caught a bug. What I mean by that is the addictiveness of shorting the markets. The rush of being on the right side of a short position is so intoxicating that some people stay bearish forever because they just love that rush of the market dropping. I think that's really, there are times to short the market, but they are very, very rare. And that's where we have to be careful. Most of the time, the money's on the long side. Sometimes the money's on the short side, but you have to be so quick on that. If you're not in the move when it's happening, you can miss it so fast, and a short squeeze can rip your face off. They literally call those types of moves rip your face off rallies, bear market rallies, short squeeze moves where everyone's positioned short and then boom, all in one day, shorts get squeezed, right? So yeah, really interesting. We'll see what comes next with the indices, but it is a top setup in the EdgeFinder. I really like the Nasdaq on the long side, but I'm waiting for price action to marry up nicely. Dow Jones is also getting a bullish rating. Let's just take a quick look at Dow. If we pull up Dow, we can see, again, resistance overhead. Let's see. This is what I want to see from the indices. Some strength, some follow through. Because here's the criticism you could make if you are bearish on the indices. You could say we floated up on rumors from the administration that trade relations are going to go well. If you're a bear or you're concerned, you're probably saying, well, show me the money, show me the proof. Where's the concessions on both sides? Where's China saying, hey, we're ready to negotiate? And where's the US? Just because the US says we think it's going to go well with China, they're always going to say that, the administration, they have to remain optimistic. They can't come out and sound pessimistic, right? So there's a little bit of that. Now, again, I am a bull, but I would like to see personally the data continue to support the U.S. economy is not falling apart. I'd like to see that. I'd also love to see a catalyst where China and the U.S. are talking. If you want to talk about getting back to the all-time highs in a hurry, that would be a successful phone call between the presidents of the two nations saying that they want to move forward with better trade negotiations. Like if there was something like that, boom, you're probably back to all-time highs real quick, right? It's not that far away. It's 14%. That could be taken back in 2 months' time, right? It's very possible that you could have that, by mid-year, we're back to new highs. I think it's likely. I think both nations want to have constructive trade, and I do remain optimistic that we'll see something like that take place. That being said, the risk to reward has worsened at this level in terms of getting long. I would be looking for something like this, and then a pullback, and then I think you have some attractive, because what happens, right? This is so important. This little move right here is so important. Why? Because it flushes out some of the euphoria. You get like 2 days down, right? 2 days down and people are back into bear mode. And that's where I want to buy, right? I like buying. I like, if I'm going to go long the indices, I like doing so at a time where people start to panic a little bit. They start looking around the room, freaking out. But I don't want to do so when the market is just absolutely flushing every day and there's no sign of buyers. Like, there's signs of buyers here, but I'd like to see them like beat up the bulls one more time, right? Give me this kind of like push higher, pull back. And then that to me is a really good risk reward trade. Doesn't mean I'm guaranteed to make money on that idea. And I may not get that idea. We may see something like this, right? That's possible. Or we may just see this and then I never take a trade. So again, I need a very specific move here to take place. I need a break higher and then some sort of pullback into support. And then I'm looking for continuation plays. Now, I said the same thing over here. And what happened? I never got a trade set up, right? We came back to this resistance level and I said, we need this. And what did we get? We did not get that. We crushed lower. So again, higher high. Okay, give me this, right? That's the setup for me. So I just want to keep, I'm reiterating that over and over, I know, but I'm just trying to explain specifically what I'm looking for. I know a lot of people are always like, Nick, can you explain your trades fully? Well, again, the simple idea is technicals now starting to look good on the indices. For me, if we can get some breaks and retests, because we've also got some confirmations from the EdgeFinder. We've got commitment of traders data showing institutional money's going long. Seasonally, it's a good time. April's a good historical month usually. April into May, it's a good time of the year, typically where indices do well. Inflation data has really cooled off. That's been a very positive thing for the indices, right? And so we'll have to keep an eye on how that progresses from here. So, anyways, I mentioned a second ago, if you guys do have questions, please feel free to drop them in the link that we just dropped in the chat. We'll drop that again here in a second if you guys don't mind. Anytime you have questions, please feel free to drop them using this specifically. I get questions in the chat, but this allows me to store them and actually bring them up on screen for a second, which is great because the chat is kind of always moving. So I miss questions pretty frequently. If you have a really burning question, please feel free to ask it using that. Look at dollar yen, please. Yeah, let's take a look at dollar yen. So dollar yen, I believe, is a bet. Nope, it was a bearish setup on the EdgeFinder. Let's see where dollar yen price action wise is going. So that's probably going to be a neutral score for me. So I'm probably not going to take any trades on dollar yen at these levels. I actually have been mentioning that I'd be more interested in a dollar yen short if you do get a squeeze up to 147.50. But that is pretty much the only setup for me on dollar yen at this time. I do think we're a little bit oversold and we do have room to continue to expand higher in the short run. But I do think sellers are more likely than not to come back in to 147.50, 148, that kind of range for the dollar yen. Send gold signals. I think you might be on the wrong stream. We're not here just telling people what to buy and what to sell. I am long gold right now with a small size. I'll stop out if we break through these lows. Let's see. What else do we have on the list here today? Bitcoin's still getting a bullish rating. Let's just take a quick look at Bitcoin. Actually, look at this. Bitcoin is trying again to break through another key level of resistance. You got 95,000 as a key psychological level. Taking a look left, you can see this 95,000 level was a floor for a little bit of time, became a ceiling for a little bit of time, and now we're trying here to make a breakaway move once more. I was looking for this move last week. We never got it. So let's see if we get this move potentially this week for some bullish setups. I wouldn't be surprised if we do see Bitcoin headed back to 100K, especially if the Nasdaq and S&P start to pump a little bit. we could look pretty good on Bitcoin as well. So we'll see. Still sitting at resistance for the time being. We'll see. Dollar index pulling back here. I made my point on my Sunday video talking about dollar index. Somewhere between this area looks like a possible sell in my view. Right. So if you get a pullback into the 50% to 61.8% retracement, you have resistance looking left. We also have the very obvious key level of support a key level of resistance at the 38.2. This key prior major level of support now could act as resistance. So I'm going to watch this pretty close to see if we get some rejection between the 38.2 and the 61.8% retracement on the dollar index. If we make a move up into that area, to me, like I said earlier, that would probably be looking at things like euro dollar longs, pound dollar longs, Kiwi dollar longs, etc. But again, got a good list of, on the currency side, taking a look at the majors, we have some pretty good, strong signals. Dollar CAD, dollar Swiss getting bearish readings, and then the Aussie against the dollar, euro, pound, and Kiwi all getting bullish setups. So I've got a pretty strong viewpoint on the dollar crosses. I am still bearish on them at this time. Commitment of traders data also seems interesting for the dollar. If we take a look at this, do you guys see this? If you have the EdgeFinder, dollar got huge sells coming into it this past week. So did gold. So that's a little bit concerning as well. But yeah, dollar really bearish. And then we take a look at these ones that we're just talking about, right? The reason these things are getting strong scores, pound got bought, Kiwi got bought, Aussie dollar got bought, Canadian dollar got bought, euro kind of mixed, but more sold than not. So that's where I'm kind of really intrigued by that pound dollar setup that I discussed earlier, and the Kiwi dollar as well. So I definitely have some currency trade setups on the horizon. And just a heads up, by the way, if you do not have the EdgeFinder, this is your last call. We are ending our sale of the year event. EdgeFinder currently, for the time being, is available at a 45% off discount. It is a one-time payment to get access to the EdgeFinder. You unlock all of our tools. And again, if you've been missing out on some of these major economic trends, we've had a really good 2025 despite all the craziness out there. If you have not been taking advantage of these kinds of moves, they're spottable, right? You can look at sentiment indicators like the put to call ratio, the commitment of traders tools that we've been showing in this stream. You can also look at economic trends, the economic heat maps that we've built, inflation data, GDP data, jobs data. All this stuff is something that most retail traders ignore because they simply don't have the right tools to look at it. But that's what hedge funds look at, right? Watch interviews on CNBC, on Fox, when they bring in, Fox Business or Bloomberg or whatever. When they bring in hedge fund managers, the greatest traders, greatest investors, what do they talk about? Do they talk about moving averages? Do they talk about trend lines? Do they talk about support and resistance? A little bit. They do still, but they massively talk about fundamental analysis, and they talk about money flows in the form of sentiment. Those are way more important to the big guys. Why should we as the retail trader obsess over technical analysis when the players that are winning, that have the biggest positions, that have the most money, who are making the most money in the markets, are not even really focused that heavily on technical analysis? Ask yourself, if you just take a look at them, you say, you know what, that's just true. If you realize that, it will change the way you look at markets. Because again, a lot of traders, what they do is they say, I'm just going to find a technical strategy. I'm going to trade that. I'm going to make a bunch of money. And then you listen to the pros and they're not doing that. Do they use some technical analysis? Some of them do. A lot of them use none. Some of them do. But almost everybody you listen to that manages millions, billions of dollars, right, for clients, guess what they typically focus on? They focus on fundamental analysis. They look at trends in the economic data reports. They look at what the Fed is likely to do next. That's what they talk about on their interviews, right? So we should be paying attention to the stuff that the winners are focused on, whereas most of the retail trading community is focused on technical analysis. Again, I'm not saying that's not useful. I use it all the time, but I use it this much and I use fundamentals that much, right? So don't ignore it. If you don't have the right tools, consider checking out the EdgeFinder. We've dedicated so much time, money, and energy to building this tool. This is our biggest discount that we do all year long, and it is ending this week. So don't miss it. We'll drop the link one more time here if you don't mind, Chandler, to send us a direct message if you'd like to take advantage of the sale before it ends. Again, you get 45% off during this week only. So don't miss it. There you go. It's your last call. We'll have another last call tomorrow. No, but I do want to get the word out to make sure people who really have been waiting. There's a lot of people who are like, I'll wait for a discount, and they may not have heard it yet, because sometimes people don't watch the stream every single day. And so I just want to make sure, get the word out. If you've been thinking about it, that is your best chance all year long. No cap, as the kids say. Nick, how many people are using the EdgeFinder overall? We have had at least a few thousand since we launched the tool. Using the EdgeFinder, a few thousand people. We want to get that number way higher over the years. There's significant cost to building and maintaining a tool like ours. And at scale, it will make a lot more sense for us. We'll be able to build even better projects, right? We've taken a ton of the proceeds that people, obviously have paid to purchase the EdgeFinder. We just churn that money back into the business and build out better and better tools. We want to take over the space. We want to grab more, and we want to be the best tool on the block for traders looking to improve their fundamentals and sentiment. The price of the tool, I know I'm talking about the tool a lot. I'm sorry. We'll get back to the charts. The price of the tool, full transparency, has gone up over time and probably will go up more, right? The cost of maintaining our tool is very expensive. And so, that's just your heads up. It's not even a sales tactic. It's just straight up the truth. Like, the price has gone up over time. The value has gone up tremendously, and the price will likely continue to go up. Here is oil coming back up to try, it seems like, to test this 66, 67 area of resistance. This was a huge level of support that the floor fell out of, right? With all this fear that we've had recently about tariffs and all that stuff. You can see that April 2nd announcement going into April 3rd, we had the big sell-off in oil, followed through for the next week or so. Now prices are trying to rebound. So we'll see. But oil, let me just see. Do we have oil on the top setups page? Let's just go. Okay, yeah, no, oil's very much a neutral rating. Trend on oil actually pointing up. So we'll see. I would actually be really curious. You may start to see a breakaway move on oil if you can take back this area of resistance. Like, if we do see all this and we see this move happen, oh baby, that would probably signal, like, if you're going to see oil prices rise dramatically, it would probably be off of the idea that, oh, okay, trade negotiations are going better than expected and are expected to continue to improve. If China's at the negotiation table with the US, that sort of stuff would probably get oil prices to rise. Oil prices dropped so much because, again, the expected, decline in economic activity based on the tariffs. It doesn't take a rocket scientist to think, if you really seriously, if everybody's up in arms and not trading with each other, that's not going to be good for the global economy, right? That's why this is a bit of a gamble, right? Whether you like or dislike Trump, or you like what he's trying to do or you dislike what he's trying to do, you have to acknowledge that's a big gamble that the administration is playing with. If it works and it levels trade in a way that improves the trade deficit for the United States, it could be a gamble that pays off, and it could be a very net positive over the next many years. But if it doesn't, if it leads us into prolonged trade wars, if it leads us into a recession, if it does way more damage than it does good, you can see why that is considered by many, I would argue it is as well, a gamble, right? Trump is attempting to make serious changes to the trade of the United States with all of its different partners, and depending on how those negotiations work, they could be very net positive or very net negative. So we'll see how it all plays out. But again, I'm not smart enough to tell you how all that's going to play out. I'm not, here to fortune tell. I'm here to trade the markets. And so right now there's a high degree of uncertainty. That's why we've had gold ripping higher here. I have a little bit of a hedge in this situation because I am long stocks, but I'm also long gold. That has been the perfect scenario for me this year. That has been one of my better plays of my trading career. In a weird way, I'm up a couple percent this year, nothing super exciting, but I've significantly outperformed this year to date the S&P 500 because of my kind of bellwether perspective, right? So I have over here, I have gold, which is performing really well in the market. And then I have this, the lag on my portfolio this year has been long stocks. So the middle ground has been a net slight gain this year. Meanwhile, if you were all in on passive stock investing, it's been a rough year. A lot of traders, maybe I'll show you a cool ETF. This is MAGS, MAGS. This is the Magnificent 7 ETF. Of course, that's things like Google, NVIDIA, Apple, Amazon, Tesla, Meta, right? And you can see if you had just bought this one, this is the biggest winners. These are the best companies, I would argue, in the whole world. And if you had passively invested in that, at one point you were down 28% this year, and currently are sitting at a minus 15% or so loss this year. So it just goes to show passive investing, there is a place for it. I do some passive investing for sure, but active investing, which is what I would argue what I do the most, like active position trading, swing trading, it's great trading. Just for context, great trading is investing. Investing is not necessarily trading, but great trading is always investing because you're looking for a long-term return. You're not looking to try and make money this week, right, per se, because there's weeks where I make money. There's weeks where I lose money. So take that with you, right? If you are a great trader, you are a great investor. If you are a great investor, you're a great investor, maybe not necessarily a great trader, right? Anyways, I asked you guys to drop some questions here, and I wanted to make sure that I take a few minutes to do those questions. I've been starting to stream earlier now, started today, 15 minutes before usual, which I'm feeling grateful because now I have some time to look at some of you guys' questions. If you have not dropped a question, please feel free to do so. We'll drop the link here in the chat. And just a reminder before I go into some of these questions, don't miss it. That 45% off sale is ending this week on the EdgeFinder. We will also extend that to memberships if that is something that you're interested in. Please feel free to chat with us on our website, a1trading.com, or we'll drop the link here in the chat. I've got a lot of setups on the watch list here this week. I'm looking at euro dollar longs, pound dollar longs, Kiwi dollar longs. I'm looking at NAS longs, dollar yen shorts if we get a squeeze higher, right? Got a lot of stuff on the watch list. Let's take a look at some of your guys' questions here this morning. Wow. Okay. We got some questions. You guys came ready for class. Nobody's late to class today, huh? All right, let's do it. So Adel Gang says they've been trading for less than 1 year. Goal is to find a profitable trading strategy. And they're asking, how do I trade or manage a small trading account? And when is it time to stay away from the markets? Great question. Also, real quick, if you're enjoying the stream, hit the thumbs up button. If you like these question segments, the best way you can let me know is by liking the stream. I pay close attention to the like button. It gives me feedback on content you guys want to see more of. Okay, so how to manage a small account, right? So I have a couple of videos on this topic. I would encourage you, take a second after this stream, search up TraderNick small accounts. This is a topic I've done several times over the years. It's a very important topic. If you're trading with a small account, couple quick rules. Only take A+ setups. You should never be taking lower quality trade setups. I know sometimes it can be tempting to place trades. You want to grow that small account. Don't do it. A+ setups only that match up with your rules and your back-tested system that is profitable over the long term. That is what you have to do. You have to take A+ setups. Second, do not try and grow a small account quickly. It is going to blow to zero. That's my take on it. People have different thoughts in the industry. Look, I've done this for a long time. I've transparently showed you my personal brokerage account. I am not here lying to you. I'm telling you the truth. It does not make me a bunch of money to tell you this. If you have a small account, I've interviewed thousands, well, maybe not interviewed, spoken with thousands, interviewed dozens of very successful traders. Nobody who is really successful in trading that shows their broker statements, that shows true transparency, none of them tell you that you can turn $1,000 into $1 million quickly, or $1,000 into 100,000 quickly, right? Great trading is slow and steady and boring. Next question. Raymond says they've been trading for 3+ years. They're interested in the EdgeFinder. You definitely should take advantage of the discount that is ending this week. Which is your preference to trade? FX, stocks, options, and why? Great question. I trade a little bit of everything. If you watch my channel, you know I trade options, Forex, stocks, indices, gold. I trade everything. And the reason I do that is because the needle moves. Market environments change. Having a lot of different tools on my tool belt is something I love. I trade options. I sell puts and calls for premium. I do Forex trading, and it rotates, right? My focus shifts over time based on the market environment and based on the setups. If a chart is setting up real good over here, why would I be paying attention to stuff that's not moving well, right? For the last few months, I've been out of the indices, not really paying attention to them. Trading gold. Gold's been trending beautifully. Trading dollar crosses. I've made some good money here this year. Trading Forex, right? So I focus on what's working, what's fundamentally making sense, what the EdgeFinder has scouted out for me. I rotate what I focus on. Sometimes I'm more indices, sometimes I'm more Forex. I do personally love to trade the Nasdaq and gold. That's probably my favorite things to trade. I think they move real well with my strategy. But if they're not setting up, I will absolutely trade euro dollar. I will absolutely sell puts, sell calls on Tesla, right? Love to do all of it. I don't think that when you're a good fundamentalist, you're not tied to one market. That's why I love fundamentals. You have a very macro, a very big picture understanding of how the markets work when you're a fundamentalist. Theo, trading 1 to 3 years. Goal is to find a profitable trading strategy. And I specifically like how you approach the markets with fundamentals and sentiment coming first, and technical analysis as a backup of an idea you could be forming. My question is, how could you apply this if one was only interested in trading stocks? I'm very curious to know. Theo, I love your question. So Theo, if you're only a stock trader, couple things. Number one, check out a1trading.com/stockbox. I haven't been talking about it too much recently. I've been trying to find a way to implement it more in my content without derailing people who are more interested in other things. I don't have a huge audience for stocks, to be completely honest with you. A lot of individual stocks are not something that are very popular on my channel, but I trade stocks. I trade stock options quite a bit. And I would encourage you to explore our product, the A1 Stock Box. It is available on our website. It's a great tool that specializes in focusing on sentiment and financial data for stocks specifically. If you have questions about the stock box and you'd like some more resources on that, we'll drop a link here to the chat to where you can speak directly to our support team right now about the stock box if that's something that you're interested in. Without the stock box, right? Just in maybe you have the EdgeFinder, or maybe you're just interested in things you can look into. Pay attention to your market sentiment tools. These are very powerful for stocks. For me, I've been buying stocks this year for the long term based on sentiment. Everybody's terrified. This is a great time, in my personal opinion, not financial advice, to add to names I've been wanting to own in my portfolio for some time. I bought more Google shares, company I love, Tesla, Meta, Amazon, Uber, Robinhood. I've bought a whole bunch of stuff this year because I think I'm getting better prices this year. Stocks are down. People are scared. I'll buy that fear for the long term happily, right? So I look at sentiment indicators heavily for stock purchasing. I also look at financial data on the stock box. So Theo, if you don't have a stock box and you'd like some more information about it, chat with us on the site or explore it on the website, a1trading.com/stockbox. Okay, Leo says they've been trading for 3+ years, looking to improve their trading psychology. Good day, Nick. My question is, how do you deal with having the patience to wait for a setup as a swing trader, especially after missing a move? Very painful and very much a learned lesson that I've learned countless times over the years. The short answer is there is no great way to deal with it other than just learning to sit on your hands, do something else, right? Go on a walk, pick up a hobby. I like to play chess sometimes when I'm like really, really feeling FOMO or in a drawdown or something in my trading is frustrating me. Two of my go-to things are physical exercise and playing chess. I think that both of those things engage my brain and keep me focused on something else because I can't control what the market's doing. I got to wait for those setups, and I'm not going to do something stupid. I've invested way too much time, energy, and money into what I'm doing in the markets to just give in to FOMO, right? That's the other thing. Think about it from that perspective. Would you really risk all of your hard time, effort, energy, money that you've invested in this just to give into FOMO? That's silly, right? Let's not do that. Let's go do something else. Find a hobby, find something that can keep you away from the charts. When you're feeling that feeling, turn off the charts. That's the only answer. Okan says they've been trading for less than 1 year. Their goal is to learn more about fundamental analysis. When you're still learning, how did you go about doing your research and what helped you learn more towards understanding fundamentals? I'm asking because I really want to get better at fundamental analysis. Love it. So first and foremost, I know this is, going to sound like self-promotion, but genuinely, I have invested, like, this is it for me. This is my career. I've invested so much energy into putting out as much content to help traders who also want to learn fundamentals on my channel. So consider subscribing. If you haven't subscribed already, subscribe to the channel, hit the thumbs up button on the stream. That's a great resource because, again, I'm basically pouring all of the things that I've learned for free on my YouTube channel. I don't sell a course, right? You can just get my, learned experience in fundamental analysis from my channel for free. Now, our products are not free. We sell software. We have a team of people that do that. You should purchase the EdgeFinder if you really are looking to get in fundamentals. I mean, straight up, I know it's a sales pitch, but this thing helps you track them way easier. Like, one of the biggest things that I struggled with before we built the EdgeFinder years ago was simply, we don't have all the data in one place. How could you possibly be a fundamental analyst if you have all these things are important that need to track, but they're all like on every different website? Like, you can get all this stuff for free. Don't get me wrong. I'm not going to pitch to you that you can only get our information from the EdgeFinder. But our value proposition is you should be focused on the data and trading, not opening up 37 different tabs every day and looking for information. That's going to take you hours. Our tools simplify that process. All of it in front of you, breaking it down in a simplified manner so that you can speed run fundamental analysis. That's what we do. That's why we're in business. And that's why, we have a product that sells really well, to be completely transparent with you. Like, it sells well because we service a need in the trading community, which is fundamentals. People know they're important, but they don't have the right tools to get them. Check out our tools. Subscribe for free to the channel. The free version is to learn by watching my channel, and the paid version is to purchase our tools that we've built to speed run the process. That's the full answer. Okay, let's see. Next question is from Bashi. Been trading for less than 1 year. Goal is to become a funded trader. I appreciate you and the A1 team always being real. Love you guys. Appreciate it, man. Thank you very much. Thank you for the support. And thank you to everybody who's a regular stream viewer. We really appreciate your regular stream viewership. You guys know who you are. We know who you are. We celebrate you in the office pretty often. So thank you for your continued support. I'm going to try and really quick get through some of these more questions. I'm running out of time here. Benefit of my trading, especially from fundamental standpoint. My question is, as someone that's currently trying to get funded, I wish I could swing trade fundamentally the way that you do and hold positions for days, weeks. However, I'm forced to trade on a 5 and 15-minute time frame because my positions need to be closed by 4:10 p.m. Eastern. So I'd encourage you to look into different funding programs, Abdullah. That's a great question. There are firms out there that are more favorable to swing traders. Time frames to get a good entry on these big fundamental waves. Fundamental waves can be traded on many different time frames: daily, 5-minute, right? You just have to fully really understand your fundamentals. Once you really get understanding going on the EdgeFinder or whatever you use to track a fundamental analysis, you realize time frames are not specific. Like, time frames for fundamentals are all time frames. 1-minute charts are moved by NFP data. And if you can track it and understand it, it's really key. Next question. Thank you very much for everybody's question. I'm trying to just get through a couple of them. What is the minimum balance to start trading? As much as you're willing to lose and start learning. Loris, is DNA funded an A book or B book business model, or just B book business model? They have a hybrid. I would encourage you to look into it. It's on their website. You can find out more information there. Bryle says, quick question about the stock box. Do you often use this in your swing trades for stocks? Yes, I do. Are you still using the same data from the EdgeFinder guide your setups? A little bit of both. I use both to find stock trades and ideas. Just going to speed run how to trade the 1 hour chart on gold. Same as any other time frames. I've got several videos on that. Search up Trader Nick, how to trade gold. I've got a bunch of videos. I also have a playlist on that subject on my channel. Basil says, last question I'm going to do. Currently trading using technicals. I am always confused and mostly trade goes in my favor, but I hesitate to take trades because I don't know about fundamentals. I'm looking to take the EdgeFinder fundamentals course. Please guide me on how to begin and rank the data because I'm not currently able to buy the paid version. Yeah. So if you are not able to pay for the paid version, totally cool. Head over to a1trading.com. If you just want to learn about fundamentals, this is a great way to do so. Head over to tutorials right here, and you can go through all of these different pages on how we've built our data sets and why we've built them the way we have, so that traders can understand, at least, even if you don't have the EdgeFinder, you can understand what we're doing with the data, why it's so important to us. Okay, guys, up next, we got Ivan coming in to the call here. Going to let Ivan go solo here for a little bit. I started early today, so I'm going to give him a little bit of space to take over the stream, share whatever he'd like to do. Plus, I'm cutting him a little bit short because I ran over time with questions. Okay, EdgeFinder sales ending soon, 45% off. Link in the chat here right now, and we're going to take a quick break before Ivan takes over the show. Stay tuned. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Weeble. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Weeble is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Welcome back, or not. It depends if you were in the meeting about an hour ago in the VIP webinar group. I would argue which is pretty fantastic. And in that group, and yesterday, I also mentioned a dollar Swissy trade that I'm looking into. We currently have dollar weakness, and oh, these there. Yeah, I know. It's all right. So, it's double checking today. Yeah, okay, cool. So, looking into dollar Swiss going higher, going into May, having a risk off scenario situation happening, at least seasonality wise. And if that doesn't happen, then New Zealand dollar, US dollar should probably continue higher in a risk on environment. Now, the question that we have to ask ourselves is the release of the pressure of the tariffs. Is it going to continue releasing? Or is it going to be like, well, I don't care anymore. So I went through yesterday. I'm going to give you the rundown, but yesterday I went through the reasons for why, or the reasons that's currently happening, and I am kind of split. I have a couple of days left until I, need to make a decision. But at the moment, I am at least attempting the idea. Attention. I'm giving the idea at least a bit of a thought process. And I said, if so, we are going to go lower on Australian dollar, US dollar. And that has not at all happened so far. So, hands in the air. Yeah. Hello, Dlee. Hello, Bashi. Hello, Alan. I'm not based in Nairobi anymore. Great. So, where I am at the moment is that we're going into May, and I previously saw an article talking about strong dollar end of the month from Barclays. That is piece of information I really want you guys to have. And not shout out to Ethan for having commercial saber. Fair enough. Love them. But that's on the tip of your ice. That's a part of your theory at the moment. Where are we going to go next? Because we all can say, and it's all very easy to say, that looks like a great trend. We are in a bullish whatever range, and we think we should go higher. And not necessarily, and particularly, but I think everyone would love to have a lower price for us to go higher. All right. So in that sense, it going higher today makes kind of sense, but I am more than anything else would love to see it go lower. So dollar Swissy, as I previously mentioned, half a minute at least, was that I hope and I pray on my two toes and my two knees that we are coming down to 82 somewhere, 0.82. And if we make a higher high from here, then we'll just make a higher high from here. And I would argue that short-term wise, that is the level to break. That is the candles that has broken. We have made a higher high, higher low, higher high, higher low. I hope that the 4-hour situation either makes us come back down to 82 or 81.5 or something, and then we can make a reversal. Disclaimer, and also in my experiences, that we can just go range bound. And so there is no guarantee whatsoever in my trading idea at the moment that we are going to do what I think we're going to do. And I think somebody, OT, you love me, and I know I love you too, but I'm not going to do dollar cat. I would literally sort out beans in brown and black color rather than do dollar cat. But okay, cool. What about it? It's bearish. It's going lower. Probably look for a dollar pullback then. But I've also mentioned that we are currently in a situation where we are technically bearish, all good, and all that, but it's a perfect situation to think about if we're going into a risk-off scenario. We're going into May, we're thinking, hey, we actually think that whatever this downtrend was is been good enough. That does not take away the situational awareness that we have to have, that we are probably going to continue lower because that's where the trend goes, right? So, food for thought. So, looking for dollar Swissy to continue higher or have a pullback at least. I am looking to do, what could New Zealand do? And New Zealand, to me, is the mirror opposite of what dollar is doing. So when dollar rolls around and goes higher, this one is more than likely to fall and break 59.59. And that would be like, okay, cool, we're going risk off. Great. That also impacts Euro New Zealand. And Euro New Zealand, to me, was, I'm going to shout out Max here. Max has been absolutely fantastic on this trade. I'm not going to call out the exact price, but somewhere in the region of 199, he sold, and to my knowledge, still holding, and was about 900 or so pips in profit. Shout out, boom. If we have what I can call bearish New Zealand going forward in this month, we can see that this one would start to go a bit higher. And for me, looking into June, would do something like this and then turn lower again. So it's kind of like choose your tea. If you're a bull, great. If you're a bear, great. There is something for both of us. I have no clue what you guys are talking about at the moment. So if it corrects downwards, then I'll play the long. Yeah. That's totally okay. Okay. So I've given you a couple of ideas now, or we have agreed on a couple of ideas. And then we have SPX. I don't know when I said it, and I probably said it ever since. Well, I think I was a bit uncertain here, but at least for now, I'm gonna say that I always have said, but I haven't. That we are probably going to go higher on indices for the simple reason that what is it called nowadays? DJT has lifted or is trying to lift. At least there's an optimism about attempting to lift the tariffs. Note that China said that they have not even discussed anything like that with America. So there is that. As you can see, I have put up a arrow higher. I am currently not in any trades for this week on this one, but I'm looking for what if we have a bit of a pullback. And I don't know what Nick went through on the economic calendar, but if I have a slight look at the economic calendar, there's NFP on Friday. There is Euro CPI on Friday. There is Bank of Japan on Thursday. There is manufacturing on Thursday. There is PCE on Wednesday, some GDPs as well. And there is some economic sentiment from Europe tomorrow. All right, I'll take it. In the meantime, until I wait for PCE and the non-farm payrolls and unemployment on Friday, I would argue that for the stock market, we are looking for, well, higher employment would send this one higher. And lower employment, lower number, which is more than likely, we are going to look into more bearish. And in my little book, if we haven't gone too far away from 5,550 by Friday, that could be my volatility. You guys, what is it? What, James? What is it? I just see OT talk about matches she just read, and then I'm seeing that Lee is talking about cake. This is so random. Do you have any trading ideas to talk about instead? Like, Jesus, what are you guys doing here? Is this a social event? Did I miss the tea somewhere? Okay, I'll just grab the coffee. Okay, cool. Cheers. I also had some cake over the weekend. It was quite nice, actually. It was quite pleasant. It was chocolate flavored. You guys are just funny. Oh. Okay. I didn't. Okay. Nick didn't prepare me for that. Now, New Zealand yen. Same story. Are we going to go risk on? Are we going to go risk off? I am planning for risk off. I'm more than likely to be a risk off. I see all the risk on signs, as I mentioned yesterday. So I am taking, as I said, dollar Swissy higher and probably New Zealand dollar higher, or for that matter, New Zealand yen. Now that we have Bank of Japan on Friday, if I just double check, so what's priced in for Japan? Japan. For this meeting, we are pricing in, so it's been May, Bank of Japan, nothing. Nothing. There are markets pressing in maybe a change by the end of the year. Potentially, at least. Okay. So, okay. Nothing more than that. If there is nothing going to be happening, there's no priced in increased interest rate yet. We still have the bond purchases. Then this, at least more than likely, is to continue higher. What about gold news? says Forex and EdgeFinder here. What are you thinking about it? I'll do that in a split second. Me and Bollat was talking about charts, and then Bashi was just had a rumbling stomach. Okay, can I be the judge of your culinary expertise? Yeah, I did, Max. I'm so proud of you, Max. So if we're gonna risk on, if we go higher high, higher low, then this is the one that I will be looking into, at least for the yen pairs going forward. Now, the only question is, when is Bank of Japan going to acknowledge the inflation? But again, I'm not Bank of Japan. I'm just given. So my little theory here is, and I think I said it a couple of last week, I don't like the reaction of 3,500. That doesn't mean that we're not going to go higher. I'm still gold bullish for the simple reason of CPI. But it seems to me that the air went out of the airbag. And I need higher highs and higher lows before I'm looking into it yet. I'm always going to be cautious. I'm always going to be cautious about this one. And simple reason is it can wreck your left, right, and center. So there is that. So my reasons for it is, one is fundamental analysis. Two is the risk analysis. And number three is the technical analysis. For waiting for higher highs, waiting for break of 33.50. So I would just put a alert there, 3355, and then take it from there. Because I'm not going to buy something that will break lower now right now. Thank you, Bashi. Thank you. Yeah, okay, cool. Moving over. I forgot to do Nasdaq. Which, funny part is, Nasdaq has almost reversed everything we have done, right? And we are making higher highs and higher lows. Are we going into straight buys again? Man, I think my answer is yes. There's only one problem. There's always a problem. But the problem that I have is this. Where are we right now? We are end of April. So end of April 2024, which is last year, we are about there. The same price came back in August last year. How would you play this? What does the Ivan indicator say about UEJ? I will do that, Gym Master. That you are in your head, you need to take your expectations, your E, you're going to take it to 0, and you're going to say, every time it goes bullish, I'll buy. I look for reversals, I look for bullishness, and then I know by some miracle that in 2024 we came back to the same price. In 2020, April, May, June, okay, not so much actually, almost. In 2023, we almost came back to the same price. In August, April what? Where's April? That is April, May, there. We definitely came back in 2022, sorry, to the very same price, and even a bit better price by the time it was becoming October, and start buying again. So that's a better price. That's not a better price. That would be a better price to buy in May. Better price to buy in August, for that matter, in November, October, and January. And It was. This is actually one of the few times actually good. This was COVID. Fine, whatever. That is about May. Never came back. Okay, cool. So I'm not going to say that. Well, 2 out of 5 years, or 2 out of 5 years that we did come back. We didn't come back, but I am more like, let me just think 2 seconds and think. I'll think it's going to come back for whatever the reason. And if I hear Trump talking about tariffs, I'll be like, yep, good. We're going to come back again. Okay. So what is the triggers at the moment? Up or down on tariffs, up or down on the geopolitical fear, macroeconomics, and any volatile change in that is going to say, let me find 16,000 or whatever. And I hope it doesn't do that. But I'm just saying, prepare yourself. What is the triggers? And you're going to think they normally won't happen. So we're going to do the trend. We're not going to do the time. We're going to do the trend. We're going to go higher. We're going to go fantastic. But the moment it goes bearish, we're like, okay, bye. We're out of here. Do you ever trade ICT concept? Absolutely not. And for the very dumbest reason, you're probably the most dumbest reason in dumbest history of dumbest. I don't care. No, sorry, I don't understand it. Like, my brain does not have the capacity to understand it. Make sense? So I got 2 requests, Euro Yen and Pound Yen. Now, I liked whatever Euro Yen did last week, which was higher highs. Right now, it's going back into the range. So I'm losing confidence. And the same thing with wave theory. Give me waves, I'll be like, that's a nice beach, baby. But I'm not trading wise making money out of it. Me and waves don't do waves. So, Euro-Yen, give me a direction, okay? I don't know. You tell me, I tell you. We are in about, I don't know, what is it, 500 pip range. So it's very random right now. I don't like it. But if it goes bullish trend or bearish trend, I'll take it. Trend-wise, technically, but I'm mostly bullish. So I'm thinking about bullish. I'm bullishly directed, but then there is May, and then there's Bank Japan. And British pound. I was like, what else do you need? You guys have a bullish direction here. This is amazing. Look at that. M2. Nothing. Again. Well, why not? Make a new high going into tomorrow then. So any direction on the yen pairs, especially for pound, bullish, makes absolutely sense at the moment. So this is probably the most sensible risk on trade that is out there. The question that you have to ask yourself, and I have to ask you, and I have to ask myself, and we all ask each other, is what is the price? So I'll give you an idea. I'll look into a buy if we come down to 90, 190, 189, and I'll look into it at 1 month, which is 188. No, it's about 190, 189. I'll look into it. I'll look into what is happening. Other than that, day traded, like in and out, not day traded. Expect it to continue rising as it does, and if it falls, you're like, woohoo, great, but don't marry it. There's nothing to marry here. As I said, ball out, my brain cannot brain it. You can say it works as much as you want, and I respect you for that. But you are great. That's all I'm going to say. Can you please explain how 10-year Treasury is linked to recession? Are you talking about the cross? It's more than anything else that... so treasury bonds and yields, more than anything else, is linked to inflation. It's linked to risk and perceived value of this in the next 10 years. If this one is junked, like we did back in 2020, so you kind of have to okay, what happened in 2020? We didn't really go into recession, I think, at least not, maybe just technically, but not seriously. We fall from about 1.8 or so to about 0.30, 0.40, 0.50, right? About there. That's when the market has gone to absolute crisis. That's crisis. And in 2022, we're like, great, everything is great. We are having higher inflation. We went from about 1.6 to about 4% in 2022 going into 2023. That's when we have astronomical inflation. So in this sense, and where we are currently at 425, is that the market is still pricing in a very good economy at 425. We are still going to have elevated inflation, and we are still going to be making profits, and we're not going to die more than anything else. When, by the way, I haven't done that lately, but come on, give it to me, Bashi or Alan. Give it to me. I said, up. And there it was. Okay? There it is. And it's about wherever here is. So if I didn't call the bottom, I don't know what bottom is, was bottoming. Oh. But yeah. Well, at least you learned something here. I know how to find the bottoms. And the funny part is, I'm the only one laughing here. Okay, cool. So that was S&P. Nasdaq? Where were we? S&P 500 bottom, and yes, I haven't done that later. That is literally when we had a stream. You can go and check the stream, 7th of April. Less jokes. You guys are the ones making the jokes, not me. And you guys are being the haram ones, not me. So, in the near future, where we're seeing that Australian dollar, US dollar is going higher, this is a range. This is alarm. This is dead. This is not great. I don't like it. This is where you lose a lot of money. This is where it can spike higher, and then it spikes higher and then goes lower and then goes back up again. It's more than likely it's going to happen, okay? So you have to be very secure, very certain that whatever is happening going forward is that you have a trend, okay? Great. Secondly, on euro, we also in the range. We might break lower. We might break higher. I don't know what's going on, but to be honest with you, as we stand now, it more than likely looks like maybe we'll have a bearish turn, but we will take it as it turns because we need trends, right? I confirm I was on the stream, and this one. Yeah, sorry. And then pound dollar, great. Coming in bullish, coming in higher high and higher low. That probably is going to be a better pound. What's weak at the moment? Can somebody give me something weak? Currency strength? I don't know. Pound is strong. New Zealand is weak. Okay. So pound New Zealand is probably a good then. Okay. Looking at right, looking like a higher high, looking like a reversal. Glad we caught it. Higher high, higher low, higher high, higher low, looking for pullback and continuation. What about pound Aussie? Is that also in the same category? No. Okay, pound CAD, already bullish. All right, cool, great. And anyone? Euro pound lower. The everlasting, never trending, always range bound euro pound is going lower. So there you go. Look for a pullback there. So a bit of a summary: dollar Swissy higher if risk off, and you need to have confirmed you got pullbacks and everything else. New Zealand dollar going higher if that is confirmed. It's not confirmed yet. It's kind of in the range bound. Dollar going lower or going higher. I'm thinking going higher, but have to have it confirmed. And one other thing else, that was the bottom on New Zealand. I'm sorry, on Nasdaq, and going higher, great. We'll see what May brings, but more than anything else, be aware that I think that we might have a lower price in August or in September. So, boom. I love you, family.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Monday. Pretty big week ahead. We have, I think, over 1,000 companies reporting earnings this week. Let's have a quick peek at that. So this week, earnings reports, we have 73 today before and after market, 178 for Tuesday, 241 for Wednesday, 265 Thursday, and 50. That's it? No, 807 stocks reporting earnings this week. So that includes some notables here. Notables, I do have some exposure on some of these companies going into tomorrow. Let's see, JetBlue, I have some shares of. Coca-Cola, I've got some shares in covered calls running. Pfizer, I'm in. RCL, I'm watching. So I think a couple important things that we've had earnings. Okay, very different projected earnings forecasts. Earnings right now, according to the S&P 500, according to the S&P that builds out earnings, there's been no earnings compression. Like everything through Q1 and Q2 projected to be higher. Macroeconomists would differ. The fact that we had a 20+% correction in the S&P and a 28% correction in the Nasdaq, that earnings compression hasn't really been priced in yet. And this is my bigger concern for the markets. Let's say in the next 6 to 12 months is that we're going to see earnings adjusted lower. I think what's happening in a lot of these earnings reports and these earnings calls is they're basically not giving us forward guidance because the near-term future is pretty uncertain. And so to say, like, we know exactly what we're going to do to position for these tariffs. I mean, look, right now there's a 90-day window where nobody really knows how to position for it. Do you have to take drastic measures to reposition to kind of bulletproof your company for earnings or for tariff concerns? Maybe. So a lot of that guidance has been kind of washed. And so we're just seeing like top and bottom consensus is decent, but there's a lot of uncertainty still. So point is, we have relatively high valuations still. Anytime we've seen, bear markets or earnings compressions, we typically see like, the 25s that'll compress down to the low 20s, historical averages around 17 that hasn't been priced in yet. So long story short, I'm watching a lot of these earnings, not just for like, well, do I expect Mag 7 to come out, with solid earnings this week? Possibly. So Microsoft and Meta this week on Wednesday after close. Okay. Amazon and Apple Mag 7 on the close. So Wednesday, Thursday after market, big companies, trillions of dollars of market cap. Let's see what happens. But also the ones that I'm watching too, MGM Resorts is not really an earnings play that I would want to jump into, but rather it's kind of the consensus for a consumer. If people are still traveling, going to the casinos, you'd think that's discretionary money, right? I don't think the whole tourism crowd of Vegas is all professional gamblers. So if Vegas is popping, that's a good sign for MGM. If prices go up, if they have decent revenues, Las Vegas Sands is another one. So if you're looking at those, kind of get a state for the consumer. MGM is ticker MGM. Las Vegas Sands is ticker LVS. Another one for the consumer would be watching SoFi, maybe, PayPal, maybe, but Visa, good one. Starbucks, good one. UPS, if they're active with distribution. Coca-Cola, that's more defensive. Pfizer, got to play in Royal Caribbean. That's a good one for the consumer. See what else this week. Robinhood, probably good state for trading. See if their trading revenues are up. If Robinhood became its own meme stock in the last year or two. Let's see here. McDonald's more defensive. Reddit, that had a pretty strong IPO last year. I think that went public last year. Airbnb, travel and tourism. Okay. Friday earnings, I don't really get super excited about just because it's, mostly energy that gets sprinkled in. So Chevron this week, ExxonMobil this week, which are big ones. Apollo, that's wealth management. So just notables. I want to know what the state of the consumer is. All we keep hearing about is rising delinquencies, rising debt. Nobody has any savings anymore. Everyone's living a paycheck to paycheck. Well, if these companies' earnings are reporting things like that, then we'll see if that's forward thinking and pricing that into the markets. I spent a lot of time last week talking through resistance levels. Okay, let's go to the charts here. So how does this week play out? Well, we're just getting started for today, and today seems pretty calm. We've got to wonder, okay, is this market going to respect this support becoming resistance? Now, we closed above it on Friday. Okay, we're above it today. But if we finish with this tiny little candle, and Tuesday is a red day, is that an evening star? Is that a candlestick pattern that all of a sudden shows that the market's responding to this past support becoming resistance? It's possible. So I'm watching this 5,500 level very carefully to see if we can hang above it. Okay, if we can hang above 5,500, then the low volume drift and melt up can get us right back into this 200 moving average. This blue line here is a measurement from a low to high, higher low to higher high. That's a symmetry measurement towards around 57, just above 5,700. All right. This measure move is a cup and handle, which is a low to high, the pullback of a cup and handle, which we actually did have. Okay. It'd be the measurement of, you take this line, I'll just trace it in blue. You take this line and then you break above. That's what's going to get us to this top line. Now, I asked a question. I'm curious what the crowd thinks here. I asked a question to some of my trading buddies over the weekend, and I asked, how many of you think that we're going to revisit all-time highs first, or revisit the lows from April first? Which ones come first? Highs or lows? Type in highs if you think the market's going to get to all-time highs first, or type in lows if you think we're going to get to lows first. No right or wrong answer. I'm just curious. I'm just kind of getting a gauge of the community, because obviously there's very drastic differences in how your portfolio can perform if we're revisiting all-time highs versus lows. So, my opinion is, if we're lucky, neither one happens. It's not going to be fun to see the market be very choppy in here, but this gives the market time to figure out what can be more of a sustainable run. Okay. I think that there's so much resistance based in, look, since we cracked this 200 moving average, to me, technically, this is a proven bearish environment until it's not, right? So we got into the 200 moving average, we failed above, we dumped all the way down here to that 20+%. This recovery, this rally, to me, this is just offering the market's natural reflex, which is when it goes down, it pulls back up. So what I'd like to see happen, would, and again, this is just, I'm trying to position for this, but this is the reason I was partly hedging in here, is because if we revisit, an equal low, or we revisit the lows, I'm going to be taking some profit in here on some hedge plays, right? I think that even if we come back down to the lows, it's going to be a bit of a bear trap. So I think anytime we get back down to the lows, unless things are just crumbling in front of our very eyes, I think a retest of these lows would offer up a chance to buy a dip again. And that dip might be a little bit more, sustainable, or at least getting back into some of this intermediate chop. Okay, so what am I getting here? Lows, I've got lows, market move, up the pullback, then go to the highs. So Lee thinks highs, got mostly lows for the most part. I mean, and again, there's no right or wrong answer. There really isn't. But I do think, looking at all of this resistance, there's our 200 moving average. We still have the death cross right there. The bulls have to prove a lot in order to say, hey, look, we're back into the buy zone. I mean, the buy zone is truly going to be up above the 200 moving average and probably holding levels above 5,700. If we don't get there, this is a very cautious time for the bulls, because they could easily lose steam and this market pulls back, finds gaps. And there's a couple of things, right? We could have the market pulling back and having a higher low. So we have this cluster of lows, this low, we could pull back again for a higher low, and perhaps this has an equal high. But if this goes this way, is it a make or break? Like, obviously there's a bunch of nuances that we could have price action wise, but I just don't want anyone to be so convinced that, like, we're going to all-time highs. I mean, maybe we do, but I think the biggest theme for all-time highs is going to be this. Okay, US and China have to play nice for this market to resolve the drama. Because if it's US versus China, it's not going to happen. If it's US and China, where, look, we can enrich ourselves as a nation, China can enrich itself as a nation together. Synergy as opposed to animosity. But if that doesn't happen, I think this uncertainty continues to play through. Look, the macro environment out there, everyone is really bearish on the macro side. And I mean, for a decent amount of reasons, okay? I think that earnings compression will go down. I think it's going to be a very real thing. But I think this is a rotation. Like, the U.S. has given back a lot of leverage this year. This move to kind of be America first, I mean, China's a real player. And I think we're silly to ignore China's leverage. And I know that I truly think they need us. But with their ability to hoard and refine natural resources, and on top of that, they pretty much make everything at a fraction of the cost that we can do. So this whole idea of onshoring for these major, I mean, look, we're a tech and service based economy, and for us to onshore tech, it's going to cost us way more money. For us to, I mean, services, okay, fine, but it's just not. It's not competitive. I don't think the U.S. is nearly as competitive as what globalization has allowed. Our companies in the U.S. that are formed in the U.S. but have a lot of labor and parts and manufacturing elsewhere. Globalization has allowed these companies to thrive. So anyway, long story short, I just want to ask: are we going to highs, going to lows? I think this market's not necessarily done with having some real resistance ahead. So just be prepared for, 5,500 could be a key level if we reject off that within the next day or so. I do think Mag 7 earnings this week are important enough that we could see the prices drifting a little bit higher, and maybe we get a pop through Mag 7, and then the market, maybe drops a little bit from there. So if there's all sorts of ways to keep progressing this analysis, but if we have Mag 7 that gets us up into the 200 moving average or up into this 5,700 zone, I could build this argument. Well, now we have what looks to be a pretty good bullish pattern. Well, sure, but if we have a right shoulder that's going to form, that still means we have a pullback coming, right? And that pullback could be a higher low, and we could still have the market chop around in here. So I think there's going to be a lot of trading that has to happen instead of just buy and hold. I don't think anything buy and hold looks good, right? So I'm trading, income generating. That's the plan. Let me see. I do have some positions I need to look through today. So I wanted to I've got this written down from last week. I have some, I think Google mainly, which had earnings last week, but let me see where Google's at today. So Google, I closed out a handful of trades. I still have some naked puts on here. So I'm up 70% on the naked puts. I think just eliminate some of these. I mean, naked put at 130 over the weekend, had some more time decay. Ratio spread, this one's up 55%. Ratio spread up 55%. This trade, that's a 135 by 130. This naked puts up around 70%. I think I'm just going to take the profit. So I've got ratio spread at 105. This one's at 130. I'm going to take some profit on this one. So this naked put pulled in $1.52 or $2.52, closes down for about $175. I'm going to go ahead and close this one down. See if it'll fill me at 78. Perfect. Okay, so that is a winner, 252 down to 78 cents. So Google 252, close it down at 78 cents. So taking a majority of the profit. The 105 by 100 ratio spread, I'm okay with that one. This one, fine. This one, I'll go a little bit longer out. This put, I'm going to close it out for 253, close it out for 78, hopefully 77. Perfect. That was an easy fill. That one's fine. This one, same thing. Close this one down for 77. Nice. That one's good. That one's good. This one, close it out for 77. Okay, so that was $2.52. 252, close it out at 77, made $1.75. That is not bad. That's making about 70%. Being capital efficient, having more cash. This is what I talked about the last couple of weeks, having more cash at the ready. Okay, so my portfolio now is just under 50% cash. I will allocate that to BIL, which gives me at least like about a 4 to 4.25, maybe 4 to 4.3 treasury mix on unallocated cash. So at least it's doing something for me, but I will pull it out and reallocate it. Okay, hedge. It's fine. Let me, actually, I'm going to ungroup these ones. So this 111. Well, I'll just keep an eye on those. Okay, so that's Google. What else do I have here? So A to Z still has some hedges in. Alcoa down, American Airlines. If these are profitable, so my June 20th, oh, those are only up a couple bucks. I'll let that hang out for a little bit. These are only, ugh. All right, I might take some of those off. I'm just taking some notes and combing through the portfolio today. Let's see here. AMD, fine. Amazon over the weekend. Ratio spreads a little bit. Amazon has earnings this week, so it makes sense why I'm not seeing profit here. But we're trading all the way up to 188. Let me look at the expected move this week on Amazon. Just because it's earnings week. So what's the expected play through, like, June? Let me look at my expiration here, June 20th. So June 20th, expect to move to the downside. I mean, the nice thing about this right now is even with an earnings print on Amazon, the plus minus is only about 20 bucks. So my ratio spread is still looking pretty good with about a 90% probability that I make money on this trade. So pulled in $1. It's only up $8 right now, but a lot of that's because we have earnings this week. Ratio spread here, that's out a little bit farther. So yeah, so Amazon, I'm going to wait on. I also don't mind taking shares. If I own Amazon shares at like 145, I would own some shares of Amazon at 145. So still upside down to the ratio spread, break even on that one. The December ones are obviously a lot farther versus June. But if we get through earnings and Amazon is up through earnings, then these probably all go into 50, 60, 7% profit. Okay, so May, this one's only out a couple more weeks. This is a 180 by 175. This one's a little bit more critical. Now, if we have a positive pop in earnings this week, this one's okay. I don't mind taking shares of Amazon. I'd repair it like I'm doing on Tesla, which, by the way, Tesla, I did roll last week. I think I talked about that in live session. Took on shares. I had a 257.50 call, and I mean, Tesla ripped like $60 last week. It was up to like 280 something. It's now 290 something. I put on a cover call at 257.50. I rolled it for this week out and get another $300 per contract. So I have 500 shares of Tesla. I rolled it. I put my break even down to the low 240s. If it's looking good, let me take a look at Tesla really quickly. If Tesla's looking good, resistance wise, if we see how we're holding these resistance levels. So I think this week would be good enough to say, look, there's no earnings on Tesla. We already had it. If Mag 7 is relatively bullish, is it enough to drive this a little bit higher? There's some good levels back in here on Tesla to chew back into the 300s, but legitimate concern is that we have resistance, support, and this is obviously a potential resistance spot. So if this is resistance again, let me look at the expiration for this Friday, because I want to see what the expected move is on Tesla. I know there's a lot of volatility on Tesla. We're trading about an IV of 40, IV rank of 40. If I go to this Friday's expiration, the 257 is trading for like it's about a 15% chance that price comes back down below it. So it should get called away if I go out one more week. Now it starts to get a little bit more where it's an expected move. Okay, so if we get to an expected move here, I don't really want to have my shares tested. I can sit and justify like, well, I'll just stay in Tesla, but I've already taken the shares and flipped them for profit. I'm taking the shares again. I'm flipping for profit. I'm trying to do the same thing. So chunk of shares flipped. Chunk of shares this time by Friday. If we're greater than 257.50, then I'm making about $14 times 500. So I'm making whatever, six grand roughly. So 14, yeah, $7 grand. Okay, I'm happy with that. Another flip, and I don't have to keep exposing. I can get the buying power back. I'll raise more cash. So I'll probably just hang on to it until this week. And then going out to the 16th expiration, I have another ratio spread with a 245 line in the sand. So this is going to be, I don't know. I mean, I think I could actually make some pretty reasonable income on Tesla without owning the shares for more than a couple weeks at a time. Okay. All right. What else do we have going on here? I'll get to top to bottom analysis here in just a moment. Expirations for this week. Tesla, there's my covered call. IBIT, that's out. I don't really have any near-term expirations because I took some 0DTs off today on SPX. These are all positions that I have. That's fine. Okay. So I'll start sprinkling in. There's going to be some news trades that I take this week with all these earnings. So there will be some trades I'm interested in. I'm going to spend a lot of time pricing in some earnings this week. Do I like anything? If I do, I'll trade it. I'm looking to see, we're kind of at this interesting spot right now where the high volatility phase is kind of over. And I do wonder if, looking at the VIX, for example, the VIX is around 25. Are we going to see the VIX settle into the teens? Maybe it settles into $20. Well, if we settle in, what happens if VIX continues to go lower? Okay, which, by the way, I did have shares of SVXY. That would have been fun to hang on to for at least $3-4. I got out of this trade. I bought it at like 35.50. I exited at 37 and change. So I got out for a quick win after 2 days instead of holding on to this. But it is what it is. I mean, it's fine. It's a lot of times we have these crazy spikes in the VIX. I will buy SVXY and try to fix it for like a quick $1, $2, $3 of income. Usually works out pretty well. So, but if the VIX goes lower, then the stock market's likely going to edge higher. Okay, one thing I'm watching on the U.S. side would be the bond market. TLT is up, which means yields are dropping. So this is somewhat encouraging to see things kind of normalize after that Liberation Day break. We're at 4.25. Let's see if we can push just a little bit lower. I'd love to see, TLT make some fresh highs and then see our 10-year yield push a little bit lower, maybe 4.2, 4.15. Let's see if there's some cooperation there on the US 20-year. Same thing. If TLT can go higher, make some fresh highs, hopefully see the US 10-year, 20-year go a little bit lower. This is the big, interest rate, refi, air pocket. This is what everyone's worried about with like the servicing debt in the U.S. This is what businesses are worried about. This is what mortgage rates should be worried about. I had a conversation last week with a handful of financial advisors. I don't know if we talked about this live in these sessions, but I think the reality that's coming in the next 3 to 5 years, if not sooner, is that yields are not necessarily going to go dramatically lower, but house prices and equity prices will probably drop. So if you think your home is worth 2x, 3x what it was when you bought it, it's probably not. I don't know the name of this. It's a publicly traded company, but their assessments of home prices right now are about 20 to 30% overstated. So they're talking about like most premiums are, and it depends on your markets. Obviously, if you got a really good real estate market, everything's insulated and there's tons of money there and tons of wealth, then sure, everything's insulated. Like where I'm at in Utah, every home that's up for sale is going to get bought. It's ridiculous how, I mean, I work with some individuals that are builders, and they're talking about doing cash deals anywhere between $5 and $15 million, cash deals. So there's no interest rate worry because people are just coming in and buying up homes, bulldozing them, and then building brand new homes. And they're basically buying a lot. Their spot on the mountain for $10 million, and they're going to start from scratch. It's ridiculous out here. And I just wonder if it can't continue, or you're just going to price out everybody where you can't be out here to raise a family unless you're making 7 figures. So maybe that's the case. Maybe that's what this area wants, is all this wealth is just like, we only want wealthy people here. Who knows? So anyway, I want to see if the bond market cooperates, offering a little bit of safe haven. Listen to an interesting podcast this week where everyone's thinking like everyone's dumping U.S. Treasuries and everyone's dumping U.S. bonds. They're actually not. On paper, U.S. bonds are being bought right now. So I'm hoping that, again, this kind of reflexive, kind of broken Liberation Day reaction, like post-Liberation Day, is that this will stabilize. So this will stabilize. It may not be great, okay? But if we stabilize, at least we see yields that will stabilize as well. I'm just hoping that yields will start to inch a little bit lower, especially as we are heading into the summer, where June to December, the Fed looks still on pace for cutting rates. Not this week, but next week. We do have non-farm payroll on Friday. Let's take a quick peek at the news, and we'll go top down. So if I go to Bloomberg and Forex Factory, go to Friday. So we have non-farm numbers this week. I'd say that the main focus this week is going to be earnings and job numbers on Friday. We also wrap up the month of April. We kick off May. Here's your Tuesday JOLTS job openings. We have CPI out of Australia. Wednesday, we had GDP for Canada. We have US GDP. Yeah, GDP for Canada and US. So that'll be interesting. I mean, look, the forecast is quite low. I mean, the previous was 2.4. We're forecasting 0.4. So it may not be negative, right? But it could be a contraction in GDP this week. That'll pop up on Wednesday. We also have the ADP precursor printing 123. We'll see what that does. Bank of Japan still looking to hold rates at 0.5%. If there's any wild and crazy Japanese, I mean, unless they're going to change rates, I don't think the Japanese yen is going to offer much. If we have risk appetite, the JPY is probably going to get a little bit weaker. Currency strength on the day. Dollar's getting a little bit weaker today. I don't know if that's just a noisy, 5 p.m. I don't know. That's a weird, like, CAD pops up, Aussie drops, and that was weird. Like, I'm seeing 40, 50 pips. That may not be reflected on prices, but we have JPY and pound strong today. Dollar getting hit a little bit worse. All right, Swiss is baseline. Let's go to finish up the calendar here. Unemployment claims. So we've got ADP, unemployment claims, PMI numbers on manufacturing on Thursday. Friday, we have non-farm projecting 129,000. Previous unemployment rate was 4.2. We're looking to forecast the same thing. Let's see what happens here on our forecast for Friday the 2nd. So 8:30 a.m. Average hourly earnings. This one, a little bit more, several more line items on the Bloomberg calendar. So non-farm 125 forecasted, previous was 209. April 129, previous 228. Do numbers just come in solid? I mean, everyone's worried about this unemployment this unemployment story, are jobs going to get worse? I mean, we won't really see jobs get too much worse until it's later this year. That's when the federal furloughs and severances, like that's when they run dry. So September is when all the federal workers that got laid off early this year, by September, they have to find jobs in the private sector. So that's when the real data, in my opinion, starts to tick up, and we'll see what September to December looks like. But anyway, if we have solid earnings out of Mag 7 this week and the market's kind of resilient and we see decent, not terribly disappointing jobs numbers, then I think the market remains relatively stable. There's just resistance levels to be aware of. That's all I'm saying for looking at the big picture for SPX. There's room for the bulls to continue to run, especially in like this kind of lower volume market. There's room for prices just to drift up a little bit here. 5,600, 5,700. I'd be watching those levels. Like I said, cautiously bullish. If it goes up here, cautiously bullish. I'm not going to complain about the portfolio going up, but I want to be bracing for resistance that could be at least a pullback into this gap, or resistance that heads back into a trend line. It's like we're not going to get like one straight move to the upside. If we do, then that is probably about as dumb as July to August last year, but just much bigger scale, right? July to August last year was almost the exact same way, just only 10%. Here was July to August, right? We had a little dump and then a big dump, and it came all the way back up, straight up. So we had a little dump and a big dump. And if it comes straight back up, like that's stupid price action on a bigger scale. But if that's what the market does, so be it. So hedge wise, I want to be looking for big reward to risk. I'm willing to hedge the portfolio 0.25% at a time. If it goes up, easy. If it goes down, I need to be ready for gap fills, previous levels, retest of the low, and make sure I can get paid really, really nicely if that's the case. Okay. All right. Let's go top down. So NASDAQ, let's talk Qs or NDX. I projected the same type of thing. Is there room to get up into the 200 moving average? Sure, we go a little bit higher, right? Is there support here? Well, there's support that can now be legitimate support. So we might just oscillate here, but as long as we don't come ripping back down to fill a gap, I think the NASDAQ still has room to drift up into the 200 moving average. This would be my first measure move. So low to high, higher low to higher high. That is around 20,280. Okay, that would put us right back to this previous high from that recovery in March. And, question is that resistance? Could be some near-term resistance with a trend line. So if we can melt up a little bit more, find some equal highs, resistance pulls back, that would be a spot to watch for. There's a gap right there. There's a trend line you can connect the dots to. And then if the market holds that level, cool. Well, we hold it and we're showing some stronger support that way. If the market breaks that level, then that's why I was asking, are we revisiting lows? Just be prepared. That's all I'm saying. Okay, Dow. The Dow has been probably I'm not going to say the most lagging, because IWM certainly is way down, because IWM was down like 23, 4, 5%, bear market territory, and still is well down for the year. But Dow, there's still a gap up here. There's still the 200 moving average. We still didn't even get above the April 12th resistance point, which is the kind of post-Liberation Day scramble. Dow might get up a little bit higher. I know that UNH didn't do this thing any favors when United Health Group got beat up badly. It didn't do the Dow any favors. So I'm wondering if this is going to continue to recover. Speaking of UNH, let me spot check that one really quickly. Son of a biscuit. So I have a May 16th expiration on this one. I was filled. It's a 440 by 450. So I need to see some pretty serious response there. And honestly, I think the better trade might be I just take it out for a longer duration. So if I end up losing on this one, I'll just take a trade probably out to Q4 and see if this thing responds with any type of bounce. I mean, we broke through basically 2-year support. And I mean, this is a crazy drop from highs to lows, down 32% in about a week. So pretty out of the norm. But if I lose on a May 16th expiration, I'm going to try to get into just a later debit spread. With the same type of asymmetry, like try to offer up, if I win, maybe 2 to 1. So that'll wash away a bad trade. Okay. All right, let's go back to Dow and Russell. So DIA, Okay, potentially backside of the trend line. Speaking of Dow, I want to check on, I know I have some positions here. So Dow, I closed out some naked puts. So this one's out to June. Small profit there, small profit there. 111. God, I can't believe, like, we're up to 402. And I have a 111 out 63 days. Naked put. Ugh. Let me check the June 30th expiration here. I mean, 360. I mean, I still have about an 85% chance of profit on the trade. It's just crazy how long it is taking to get the time decay and the premium decay to pay me profit. I mean, I'm only up 20% on a naked put. I sold that at a very high IV. So that's a little frustrating. That makes me not want to trade the Dow compared to like trading Qs and SPY, which I made like 80% on puts last week when I closed out some naked puts on SPY and Qs. The Dow's been just a little stickier. So watching. Same thing here. Like I'm only up 20%, so I'm not going to close it yet. All right, I'll watch that stupid Dow. Russell. I do have some covered calls on Russell. I've got a covered call, I think, to June with a 200 covered call. If we break above, and this is probably the big level here for the Russell, if we break above 200, cool. It's a recovery. You know, I think that everyone could probably acknowledge this pattern. If the Russell came back to this level, then there's a potential bullish pattern here. Any dips and pullbacks look pretty favorable for maybe another run. I do have legitimate concerns on stocks in the Russell. I mean, the fact you've got 2,000 stocks, I'd rather trade IWY or X. These are growth Russell as opposed to like the 2,000. I'm not interested in 2,000 companies because most of them don't make money. Most of them are not profitable. Okay. I'm interested in like the top 200. Give me like the top 10 Russell. That's what I want. So that's what IWD. This is the top 1,000 value. IWY is the top 200 growth, and IWX is the top 200 value. They have performed way better, showing a lot more resiliency than IWM, which is still from the all-time highs, well off the highs. So all-time highs, we're still down 20.48% with a correction that got us into nearly 30%, I believe. 29.99% peak to trough. So Russell has a lot of explaining to do / climbing to do. We could obviously spend some time bottoming. So maybe this is a high to low, high to low, high to low, high to low, something like this where the Russell carves out a bottom. And that's a great trade to look longer term Russell. That would be the gap close of like large caps underperform, small caps either stay the same or small caps look a little bit better. This maybe looks better the second half of the year. Right. So if the Fed starts cutting rates, that might help Russell companies. Maybe not. But anyway, trades that I have running, I have some shares. I have some puts that are way out to like 105. Those should be looking pretty good right now. Let me see. IWM. Oops. So I have some shares are covered at 200. That's out to June. And then my 105 by 100 is a ratio spread and some puts. Check on those. So this is a 100 put. It's up about 44.5%. So a little bit longer on these trades. And then a 180 by 178. What is that? Did I do a one? Let me just check an individual count here. Russell. So that is a 1111 trade that should. Okay, so I pulled in $2. It's up about 48%. So the way this trade works is if we're less than 180, but we're greater than 105, I can make $205 plus a profit trap of $2. So if we're greater than 105, then I have 205. If I'm greater than 105 and less than 180, then I make 405. So either 205 per contract or 405 a contract, depending on where the range is when this thing settles. So overall, it's fine. I'm okay with that. Intel popping back up. I did a collar trade. I bought some shares of Intel collar trade last week. I'm trying to get it called away in the mid 20s, 24, 25, 26 would be fine. Let's go. Move index. Bond volatility is way down. That's a good sign. SVXY is up. Dollar index a little choppy, as I talked about the last week or so. We are oversold on the dollar. Don't be terribly surprised to see the dollar have some type of like falling wedge pattern, and then a dollar gets a little squeeze. I don't know what that catalyst is going to be. Clearly, the dollar's been beat up really badly. I also wouldn't be shocked if we go just a tiny bit lower to see if we come back down to a symmetry level, wait for a trend line break, look for confirmation on a lower time frame. The good thing is look, a dollar pullback heading back into, let's say, 101, 102 area. I still think that is a good indication of a sell trade on the dollar. I mean, the dollar is in a pretty nice downtrend. It could be a multi-year range trade. Like this could just be a noisy spot and it comes all the way back up again, maybe. But I think these are big changes in the dollar. I think there's a big changes with the global markets. I think that this is probably one of the more accelerated ways to see that the dollar is not having the same type of global reserve status / safe haven as it once did. Case in point, the market dumped hard this year and the dollar dumped with it. So that whole idea of the dollar going to a safe haven wasn't really the play. Gold was a safe haven. Swiss was a safe haven. Japanese yen was a safe haven. Dollar, not so much. So I think a little bit, I wouldn't want to short the dollar because I think it's already overcooked to the downside. A little bit more, you're just kind of playing with, yeah, you can maybe tap the lows and sprinkle in some lows, but likely we're going to pull back. It'd be this area that I would say I want to reshort, right? Good structure, align your time frames like a 1 hour chart that turns back into a sell zone. Great trade. See if it revisits lows, right? But right now I'd just be looking for either stay out of it. If you're, short the dollar already, as I've said, like protecting profits, but I think the dollar's going to at least have some type of pullback. Seasonality play on the Russell. Like I said, if you're lucky, second half of the year maybe looks better for the Russell. So, I mean, if we're going to see Russell comes here and then maybe pauses, maybe there is a bullish head and shoulders trade on the Russell. But this would be like the second half of the year trade. And I don't think we're necessarily getting there. I think that we're probably heading here, maybe carving out a low. And that's if 170 holds. I mean, it held right here. My concern is that if we break, there's a lot more downside in the Russell, which would be nuts. But we'd have to see, fresh lows revisited on S&P and Nasdaq for the Russell to break lows as well. So I think that, this low being around 30% off the highs, a little indecision in here, I think goes a long way for the Russell. In fact, I mean, I don't know if this is a good trade, but if it's right in the middle and I sold a put and I sold a call and I put a strangle on for like 40 to 60 days, that might be a really easy trade right now for income. Otherwise, bigger picture is as long as we hold this low, I would like to see the Russell, second half of the year look better. But I just think we're in a tough bind right now. Until the Fed starts cutting rates, I don't think the Russell is going to have the proper fundamentals to really grow. All right, let's go gold, silver. Gold hanging out there right around 3,200. Everyone's been so enamored with gold direction this year that we've obviously had a lot of it. I'm going to see a couple things here. So we're holding some intermediate support. Gold might just go into a consolidation period, which I think would also be a good sign that the bulls are still very interested in maintaining bid on gold, right? So this goes into a range trade. I think for right now, I'm probably just going to sit tight on gold. I might actually sell some calls around these highs as long as I can pull in some credit. But I think we would struggle to necessarily rip the all-time highs without having a major risk-off environment. And I still think the correction, which is what I've been after now for months, is just trying to be patient and waiting for a dip. So if we just go sideways, okay, well, my moving averages will catch up. They'll catch up. They'll catch up. They'll catch up. If we have one type of like poke to the downside and then maybe a rally again, I mean, you buy the dip. But the gold silver ratio, I mean, I wouldn't mind to see silver or gold rather come back up to revisit the highs and maybe look again to sell some premium at those highs. If I get it called away, I'm not going to be offended by getting gold called away. I can always reestablish new positions. I can always start again. My allocation originally was about 5%. which is now showing about 12% profit. So, I mean, realistically, I should be getting rid of some of my gold if I want to keep that allocation. However, I don't mind having like a 10% allocation to gold. I think, I mean, I would rather own gold than bonds right now. I think gold is potentially the bubble trade of like a safe haven environment if we really need it. I think gold's going to be your better safe haven right now. But maybe a range. I'm still looking to see if we go high, low, lower, high, lower, low, projecting that move out to about 31.30 or about 30.30. So if there's any follow through, that still gets me back down to like a 50 period moving average. If I can buy some dips, I'm looking to buy some dips. Silver. Would love to see silver break. I don't think there's any such thing as a triple high. So having this resistance right in here, I would love to see this resistance. I'd like to see price get back up to it. And if we can break that, man, silver has so much open space to the upside. You know, and one thing we haven't seen on price action, because gold went up during the risk off trade during like post liberation day. And what does silver do? Down. So gold had like a little 2 or 3 day dip and then ripped to highs. Silver has not made fresh highs. So if silver plays catch up, then a break above this resistance point around 34 and change, anything greater than 36, I think has room to run into the 40s. And silver could get pretty exciting. I mean, I really think it could. And these highs go back to 2011 and 1980. So if we get a silver trade running into the high 30s, there's not much stopping it. I'd love to see it get in the high 30s and just kind of make its way to a all-time high resistance zone, which is still about 40% away. And that gets me a little bit more excited about holding silver and maintaining a slightly bigger position than gold. Okay, Bitcoin, we're at 94.4. Bitcoin has had a pretty good looking breakout. My fib that I drew from the low, keep an eye on this one because it still might offer up the pullback that I was talking about. So if we have a low to a high, we pull back, let's say 50%. That's not a bad spot to look to get long. So I like buying dips on Bitcoin. If we had, area 1 or the lows area 2, either one of those spots look pretty good. If all it does is flag, so we go up here and we have a bear or a bull flag, I mean, that's okay. I don't necessarily love buying bull flags, so I probably won't. I'll just maintain my position. But if we go up to the highs, well, that's cool. I'll have a smile on my face going up to those highs. But if we get to those highs, I wouldn't be surprised, and I don't think any trader should be surprised either, if it doesn't break the highs, but rather hits resistance, comes all the way back down. So maybe a bigger accumulation zone on Bitcoin for the year 2025. Because to break these all-time highs, we'd have to either see a lot of risk appetite come back in, liquidity, M2, like money supply, global liquidity is going to have to continue to be escalated and growing and climbing for, I think, Bitcoin to still get that bid. Okay. So anyway, a bull flag maybe stretches up to the 107, 108 zone. Watch that resistance at all-time highs. Maybe a good spot to protect some profit. If you bought some Bitcoin down here, that's a good spot to protect some profit. It's, to me, I mean, I don't want to get IBIT called away, but if it does, IBIT, I've got covered calls out to $62, which is at the highs. If it gets called away at highs, I average more in at this gap. So this level to these highs, if I get it called away, I mean, I'm turning an income trade for about 32%, 33% profit, which per share, not bad considering I've got 3,000 or 4,000 shares of IBIT. I mean, it still adds up. So anyway, net, IBIT is up around 40 grand. Well, if it gets up to, $50, $55, $60,000, it's probably worth taking some profit. If GLD, which is up around $21,000, gets up to 25, 30,000, I mean, I'm really watching my percentage levels right now because gold is working out pretty nicely, as is silver. So is Bitcoin. The Nikkei's come back in a pretty good way. I'm profitable on the Nikkei now. But I also know that it could be on borrowed time. If there's going to be a resistance level ahead, I need to make sure I'm protecting some profit to continue to raise cash and then redeploy for some more opportunities. I don't think that we're just going to keep going in a straight line one way or the other. Okay. All right. MicroStrategy, getting some resistance here. I've got a call at 310. I'm just going to hang in there and see if 310 holds. I mean, this is also watching Bitcoin. If Bitcoin holds resiliency, where we have that push up in Bitcoin, maybe a pullback and it goes higher. I mean, Bitcoin still has room to get to all-time highs. MicroStrategy, this is just an income trade for me. If we stay above 310, I make about 15 grand. So I'm not trying to flip this one per se, because it's been a couple of months now that I've been in the trade, but I did lower the cost basis from 350 down to about 254. So within a couple of trades on options, I mean, I've lowered the cost basis by $90, and turns out that I can get this and called away for about 55 to 60 bucks a share. Overall, I'm pretty happy with that. But I'm watching 310 chart alarm set right there. Coin is up above 200 bucks. I'm out of most of these trades. These are all income trades. Those are winners. I don't have any exposure on coin right now. Ethereum, I would be maybe excited about Ethereum on the right-hand side of the trend line. I think there's going to be more of a trough here, going to bottom out. Right side of the trend line, maybe Ethereum has catch up. I think Bitcoin is just a better trade. I think Bitcoin's a better play. I think Bitcoin is essentially your S&P of the digital world. I think that's the way I'm looking at it longer term. There's also more of like, I mean, you have like your institutional recognition on it. I mean, did we actually have ETFs approved on Ethereum? I don't remember if we did. I think we did have a couple. I just don't know if they were like major plays like we did with BlackRock and Fidelity and some other like major custodians offered up Bitcoin ETFs. Copper, I got copper called away for profit. Copper's it's anybody's guess now having this big shakeout in copper. Don't be terribly surprised if copper is something like this, where it's just a big wedge. Maybe there's some more indecision. If the global economy looks promising, then old Dr. Copper might hit all-time highs again. This whole AI build out, this AI infrastructure should benefit from copper. I just don't know if we're going to go straight up, straight down. It might be, time to settle down for a second and copper just goes sideways. But if we get near lows, I mean, copper here, if we come back down to lows, it's like I'd be interested in buying a higher low or doing like a similar trade with a 1-1-1 strategy and see if I can kind of define risk my low. Japanese yen, I'm going to put another chart alarm at these highs. Okay, this trade was profit already. Nikkei, I'm still long on FXY, the shares. I'm also long EWJ. Let's see if we get to these recent all-time highs. This will be 73.28. I'm going to put in here new all-time highs. And that would be even through the wild and crazy July to August of 2024, we did get to all-time highs. The reason I like EWJ is it gets rid of the bottom 15% of the Nikkei. So, Nikkei 255, get rid of the bottom 15% of it. Hopefully that helps, rise the quality of stocks you're holding here. This has been a better performer. Look at how this thing has bounced back versus the actual Nikkei. Nikkei is not even close to those highs. EWJ bounced back pretty nicely. Okay, DAX. Speaking of bouncing back nicely, I was looking for a cup and handle. I'm looking for reversal. It's like, this is just a straight up freaking V bottom. So if this goes back up to the highs again, okay. Don't be surprised if we have resistance though. And this is just I just think this is a huge shakeout. If we have everything was looking good, internationals outperforming US, this was what offered up the biggest dip to get that like instant correction. And now we're going to see how much of that repatriated money is coming home to ETFs that are within Europe. Here's Germany. What about Austria? What about Greece? What about, they're called pigs for a reason. Portugal, Italy, Greece, Spain. They have been like the lagging countries in the Eurozone, and their ETFs this year have done exceptionally well, like 30+% gains. That dip we saw in early April, I think this is just, fiscal spending. I'm hoping there's a trade here. If we come straight back up to the highs, maybe a pullback in a higher low that you can kind of add back in. But how am I benefiting from this? SCHY. That's the ETF that I'm playing. That is a Europe and China-based ETF. That's non-US. And I also have FEZ, which is the DAX. So I'm trying to participate. It's just not crazy allocations, and I'm not doing a bunch of options on it like I would in the US stocks. FTSE, kind of the same thing. Is there a cup and handles that just keep drifting higher? Argentina, maybe a shakeout here, maybe come back down, revisit lows. I don't know. I'm debating on this one. This has been a good country for the last 3-4 years, ETF wise. China, maybe some sideways. If U.S.-China issues can get resolved, or at least there's a reality that they can both get along, be frenemies a little bit longer. Optically, it's not like we're trying to destroy. Then sure, I still think China has good potential. Brazil, looking a little bit better. Shares of EWZ are getting into the buy zone. Hopefully it stays above my 200 moving average. Latin America, nice little rip. So from 21 up to 25, that's looking pretty good. So exposure on both of those. Hopefully some, South American value looks okay. Mags, this is Mag 7. Room to get up to the 200. We've got Mag 7 earnings this week with 4 major companies: Meta, Microsoft, Apple, Amazon on Wednesday and Thursday after close. Okay. Apple still hanging in there. Amazon at 187. Watching for that 150 level. I'll put a chart alarm here at 150. And that's going to be my ratio spread low. And the nice thing is that's below this low. So I'm just going to hopefully just see these as income trades. I wouldn't mind taking shares of Amazon. I do have some in the 170, like 175, 170 zone that I'll keep a close eye on. Let me set another chart alarm at 1. Okay. Google, big pop last week, fading a little bit. I closed out some Google trades. I'm still dollar cost average in for these 3 areas. One kind of 40 watching. Meta, I'm not going to sell Meta, but I'm hoping that we can settle back into lower lows. I'd love to see Meta settle into like the low 400s. And I think this is a great spot for a long-term buy on Meta. So anything like 450 or lower, I'm probably positioning for some good upside. There's a lot of asymmetry here. I'll get to currencies in a second. There's a lot of asymmetry. If I were to look at Meta here with the fine risk, I might be willing to put probably $2,000 to $4,000 on a trade that could potentially pay, $8,000 to $10,000. Like, not a bad trade. Like literally $2,000 to $4,000 that could pay double or triple. I think that is very feasible on a trade with Meta. But that's going to be defined risk. Microsoft, pretty good recovery. Earnings this week. There is resistance. Here's the low. Do we get back into all this previous support? Do we get back into this 200 moving average? We'll find out. So what has earnings this week? Apple, Amazon, Meta, Microsoft to watch. Netflix. Honestly, at this stage with this pop to the upside, I'm going to see what this trade offers. I don't really want to fight Netflix, but let me see. I'm curious, just looking out maybe to the end of May. Let me build out a little trade here. So if I did a 20, these are 10 wide. Oof, this is going to be a little risky, but let me see. If I did a 90 by 12, so 1190 by 1200. I mean, there's a profit trap of over $1,100. There's about an 85% chance of profit on this trade. Does Netflix continue to pop to the upside? $1.60 is not bad. Let's move this down a little bit. Um, 88, 89% chance of profit. 13 delta. This should be well outside the expected move. Let me check and see what Netflix looks like from a builder. I'm going to build out a 1 standard deviation move. We already had earnings. Let me look at Netflix. If I went out to the end of May and dock that one, so that would be a 12, 10, 20, 30, and 60. 12, 10. I'm going to wrap things up here in about 10 minutes. So I'll get through some currencies here. Just give me a second. So 1210, 1220, 1230, and 1260. Get that in build this out. So if I did May 30th, 1210 and 1220 and 1230 and 1260. So it'd be a buy, sell, buy all calls. Trade to look like this. So I've got a profit trap. Okay, this is why I would say I'm not going to take the trade, because this is a 1 standard deviation move to the upside. I would want this profit trap. I want that profit trap to be out here. So this is telling me that I probably need to start this thing around 1300 or go out a little bit farther. And so maybe instead of going out to end of May, maybe, I don't know, maybe July, August, if I like this trade, and I could also put it way out there. So I'll probably just stay out of it for right now. We're sitting in the middle. Here's a 1 standard deviation move to the upside. There's one at the downside. Now, the fact that we hit all-time highs recently, it's like we could be just selling off from here, maybe. But just in case we're going to drift, if we got some positive drift in post earnings, and if Mag 7 comes in positive, there's some more risk appetite, then I don't want to be risking, $1,000 on a trade that would be a lot better positioned out here. This is probably more of like the 90+% win rate as opposed to 80, 80 to 85. So I might just have to go out a little bit farther, but I don't mind it. So I'll debate. I'll try to find the right timeline, the right risk reward, see if I can find a trade at Netflix. All right, NVIDIA 106, still maybe room to get back into. I mean, NVIDIA already had earnings. They had earnings back in February, and then earnings again in May, but bottom around 85. I mean, that's crazy. That's crazy that NVIDIA, a $1.3 trillion company, was down to $87 at highs at 150. Anyway, I mean, I guess it can just fight the good fight. I've got collar trades on here. I've got some puts at 70 and 75 and $50. Tesla, as I expected, Tesla is fading. I might just be rolling some calls this week if we get back below 250, 750. We'll see. But that was a nice little squeeze on Tesla right up to the 200 moving average. You can see this resistance is pretty firm. So right now, this resistance appears to be holding this support. So, do we drop all the way back down this week? Yes, no, maybe. I think Mag 7 resiliency is going to be really important. Okay, bonds making some fresh highs. That's not a bad thing. US 10-year hopefully going a little bit lower. This could be good because I'm hopefully getting a 30-day lock within my mortgage. Give me to 6.5 or lower, and the interest rate sucks, but it's better than what it's been. I was quoted like a 6.85 like a week or two ago, and if I can get it down to like 6.5, that'd be a pretty big improvement. So we'll see. Thursday. $4 p.m. Eastern. Got it. All right. Let's see. Let's do some currencies. Again, take a quick peek at currency strength. JPY strong today. Pound in second place. Baseline Aussie Swiss. Dollar bouncing off the lows a little bit. Vertical axis. Not hyper volatility today. We got a decent amount of news this week. We're wrapping up the month of April, kicking off a new month with May. We have non-farm payroll this week, job numbers, unemployment numbers this week out of the U.S. Big earnings this week for the stock market. Aussie CAD, I'm still holding long. Aussie Swiss, still holding long. I'm still watching for a bottoming pattern. It's not there yet. I will be very vocal about whatever I see. This could be just working higher, and maybe it comes back up here. Then we have a pullback and another push. That 3-wave move is all I need for profit. I'm in profit, but I'm talking about the way I want to position for a bigger chunk of profit. I'd at least like to see a 3-wave move. So I'm still watching the Swiss pairs very carefully. Aussie yen, as I mentioned, off these lows. If you're buying here, looking for short-term confirmation, a spot that wouldn't be awful would be if we pull back into, this level and then confirm a bottom, or fail at the lows, confirm a bottom. You can just see like low risk to high reward if it's offered up. It's not a bad play. We have Bank of Japan this week with interest rate decision. They're likely not going to do anything. So I think that one interesting correlation the next maybe 12 to 24 months would be a stronger Japanese yen and a stronger Nikkei. Could happen. It's still one of the only central banks that's raising rates right now. Aussie New Zealand, looking for some levels to bottom. Oh, come on, man. I've got trading pending orders at 106. We're just not there yet. So I'm just going to hold out and see if I can buy in on these key levels of support. And I'm just going to hold to try to get back to like 113, 114 on the Aussie New Zealand. Aussie dollar, no trade on it right now. CAD Swiss still actively looking for a bottoming pattern. This one may end up coming back down to revisit lows. I'm going to watch for a double bottom there. See how this plays out with some type of like 3-wave move. CAD Yen. You know, I wouldn't call the bottom necessarily, but just watch. Like these yen pairs can be very tricky, but a little breakout trade, defined risk might work out pretty nicely if these lows can hold. Swiss yen, I'd stay out of that one. Euro Aussie. So I'm looking for the Euro Aussie to give us a pullback for a swing trade. It might just slide lower, lower, lower. If it pulls back, I'm looking for a sell trade. If it slides lower, I'm probably just not. I'm just observing. EuroCAD, very messy here. But if we don't take out the highs, I mean, EuroCAD should respond back to a little bit of rebalancing. So having this low, this high, we're just getting a little bit choppier at these highs. So somewhere up here, maybe a rising wedge. Probably easier just to trade a break below like 56.50 or so and see if it comes back down to 5,400. So a sell stop. I mean, it looks structurally pretty good. We've dropped. I'm watching. It's only about 60 points. SPX down about 60 points from the highs today. I think we're going into red territory in the day right now. Euro Swiss, again, actively watching for a bottoming pattern. Euro Pound retreating pretty nicely off of like my robot kills it on this currency pair for this exact reason. Euro Yen, no trade. Euro New Zealand, similar to Euro Aussie. If we get a pullback, I'm looking for a swing, lower high to lower low. If it just keeps going lower, 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 then I'll buy it in the low moving averages, the 144 to 200 moving average. Euro dollar. I'm still looking for a pullback. If it gets back up to the highs again, this could offer up a pretty good sell trade, like a low risk, high reward sell trade on euro dollar. But otherwise, I'm just going to wait. I mean, I think the dips would be, look at all your fib levels here from this low to this high. If the euro dollar offers up a high sell opportunity, come back down to the 236.382. I mean, that's a really good trade. Come back to equilibrium, really good trade, especially with a pretty tight stop loss. If it just breaks here, I mean, there's probably a shorter term pattern there. It breaks and goes down. There's just tricks around the Forex market. All sorts of trickery. Pound Aussie, same as Euro Aussie, looking for a pullback and a swing. Pound CAD, I'd like to sell this one at the highs if we fail. If we hit resistance here, I'm looking for a rejection. See if this one becomes a range trade. Be a good range trade on the Pound CAD. Pound Swiss. Pound Swiss has room to get back into the 113s. Again, possibly a good spot here would be any type of pullback, low to high swing, pullback around maybe 31 to 61%, and then a swing up into that pocket zone. I think there's room to get to like 1,300, 1,400 on Pound Swiss. Pound Yen, staying out of that one. Pound New Zealand, we are getting a bit of a swing here. Can we go up to this area and offer a pushback down? Maybe. Pound dollar, stay onto this one for right now. I like euro dollar better. New Zealand CAD still long. New Zealand Swiss still long. Actively looking for a bottoming pattern. New Zealand yen. You had your chance to buy this thing at the lows. Again, it's still making lower highs, lots and lots of lower highs. So is this same type of thing? Same type of thing? Is it going to hold this bottom here? Is it going to be just a big falling wedge? Maybe. Like this could be a good trade, just not yet. I want to see better structure on it before I just say that's the bottom, because I don't think it is. New Zealand dollar, I'll pull back, just take a low high swing and maybe a pullback towards like a 50% zone. Can maybe propel this up. I think there's an open space to 63.70. 63.50 is a pretty conservative take profit. Dollar CAD, again, this thing has done nothing. Since we hit 38.70, this thing has done absolutely nothing. So, non-farm this week with CAD numbers and US numbers, maybe it breaks it loose a bit. But I mean, again, all the exciting stuff on the dollar CAD is already done. Are we getting some levels here? SPY. Okay. I'm watching some gamma levels this morning. I'm curious if this 545 level is hit today. From 53 to 44 or 53 to 45. That's about an $8 move. I mean, we might get there today. Sticky around that 550 handle though. All right, dollar Swiss. I saw several of you said, I'm short dollar Swiss. I would hope not. I mean, if I looked at this on a bigger time frame, I'm sorry, but I'm not short dollar Swiss. If you're short dollar Swiss, where are you going? Okay, we had a flash crash low there. We had a intervention level there. I mean, I don't know if that's where you're trying to target, but I'm not short dollar Swiss. So I don't know if this is going to be a low that holds and the dollar just stays in a bigger range. If gold obviously runs to like bubbly territories, then maybe there's this before the Swiss National Bank probably intervenes, because I wouldn't be surprised if they do at one point. They haven't been vocal since 2015. That was the last time the Swiss National Bank did anything, and they fudged up the entire Forex market. So I think they're just keeping their mouth shut. There's some safe haven flows with Swiss because of gold. But I'm looking to see, if a bottoming pattern comes in, we're oversold with divergence. If you're short dollar Swiss, I'd be taking profit. If you're looking to get short fresh, I hate that trade. So I think at the very least, we pull back into this cluster or pull back to this trend line break. If there's going to be a resumption, then there's your resumption. Otherwise, anything now would be, divergent, looking to see if we get a bottoming pattern, pull back into a pocket or some, 87 to 8800 levels, and I would get out. I'm long on dollar Swiss, and my break even is right in this little cluster here. So I'm looking to get out around 8700 or so. Okay. All right. That will do it. Dollar yen, last currency pair here, holding off these, September, August lows. I'm not saying these lows are guaranteed in, but it's a pretty good low risk, high reward trade as long as you're not beat up too badly at these lows. So there could be some risk appetite in here. I could see us pulling back into a kind of a 148 to 149 handle, but actively looking to see if there's a bottoming formation to trade from. If it's, if this is it, like a little tiny crown pattern, then maybe that's it. But I wouldn't be surprised. I don't think anybody would be shocked in Forex, especially if we come back down, retest the lows, and then we fail, and then we bounce back up. So if you're looking to buy low, 140 is a great spot to buy low. And if it works its way up from there, just watch the trickery at those lows. So, all right, I will let you go. I got to bounce into the session. All right, thanks, everybody. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.